Welcome back for the next panel discussion of the Business Standard BFSI Insight Summit. I'm Binu Sandhu. Our post-lunch session is quite an exciting one, and it takes off from what Mr. K.V. Kamath said in the morning, that every NBFC should be treated as a bank. We have experts from non-banking financial companies debating the very catch-22 situation confronting NBFCs, which is to be or not to be a bank. Known as shadow banks, the question is, does it make sense for NBFCs to become full-service banks, or do they even want to be full-service banks? We have with us Mr. Umesh Revankar, Executive Vice Chairman, Shriram Finance, Mr. Rajiv Sabharwal, MD and CEO, Tata Capital, Mr. Rakesh Singh, MD and CEO of Aditya Birla Finance, and moderating the conversation is Business Standard Banking Editor, Mr. Manojit Saha. Over to you, Manojit.
Thank you, Venu. Am I audible? Yeah. So, good afternoon. A very warm welcome for the Business Standard BFSI Insight Summit. So, we have a panel discussion comprising of the CEOs of non-banking finance companies. The topic of the discussion is to be or not to be a bank. Is it a catch-22 situation among NBFCs? A little bit of background should be in order. NBFC sector has grown leaps and bounds in recent years. They have reached in areas where traditional banks could not reach. The growing importance of the NBFC sector in the Indian financial system is reflected in the consistent rise in NBFC's credit to both as GDP and also in relation to banks' credit. However, at the same time, NBFCs have an inherent challenge, which is their high dependence on banks for funding. The raw material of any business is the resources, how you raise. And we have seen during the IL&FS crisis that banks can stop lending to NBFCs. Another recent incident was the merger of HDFC and HDFC Bank, where it was cited that one of the reasons for HDFC to merge with HDFC Bank is that the regulatory gap which was available earlier is no longer there. So it's better to be a part of the bank rather than surviving individually. So to discuss some of these issues here, we today have a stellar panel, as you can see. So to start with, Mr. Revankar, what is your take on the issue? Should the NBFCs become a universal bank? Are there advantages of NBFCs becoming a bank? So these are opening remarks. So every participant will get time to share their opening thoughts. Yes, sir.
Thank you. I think this question has been increasingly asked, especially after a regulator is trying to reduce whatever the gap we had, arbitrage NBFC enjoyed in NPA classification or in the accounting standards. But still there is a difference between accounting standards for bank and NBFC as of now. It is not the same. Actually, it is a little advantageous to be in a bank in the current accounting, accounting practices.
Right.
But it is likely to change there also.
Yes.
But we designed to become a NBFC. When we started NBFC, we never wanted to be a bank. Because most of the NBFCs, they started with a certain focus area, certain niche segments, and certain skill sets what we have built. We never designed to become a universal lender. That's how most of the NBFCs started. But as we grow big, as we are hiring better talent, now we have capability of managing multi-product and even the composition of the liabilities is also diversifying. It is not that we are dependent on bank. That's not true. most of the larger NBFCs have diversified liability portfolio. And since we are a deposit-taking NBFC, we have certain advantage. We have a retail access. So I think as it is, we are happy to be remaining as NBFC. But depending upon what regulator thinks or what the government is thinking, how they would like the reach of the credit to flow in. If at all government is or a regulator wants the credit flow to increase to the level, to the customer, which traditionally has been accessed by NBFC through bank only, then probably yes. But I feel the country like India, which is such a large country, demographically and geographically such a large, you need a different set of intermediation all the time. So you definitely need NBFC or MFI to reach out to the customer who otherwise not possible to reach out through bank. So that's a feeling we have. So, however, we are quite comfortable with where we are now. But going forward, how it shapes up, then we'll take a call as per the situation.
Right. Thank you for your opening remarks. Mr. Sabarwal, would you like to become a bank?
No, I think the way to look at is, you mentioned about differences. There will be certain products and services which banks can offer, which NBFCs can't offer. And there are certain products and services which NBFCs can offer, where banks find it difficult to offer. If you look at the overall scenario, I think the Indian credit market is growing at a very healthy pace of over 15%. And in this large market, NBFCs account for about 25% of the credit of the total system. In fact, the whole credit system is divided between public sector banks, private sector banks, and NBFCs. And each has a sizable share of the market. And each one is contributing to the country's growth in terms of providing more credit, in making credit more accessible to individuals of the country. The current regulations allow for both the NBFCs and the banks to coexist. What the regulator has done through scale-based regulations is identified the upper layer NBFCs, where they have said that the, I would say, most of the governance norms which they will have, or almost all governance norms which banks have, are to be followed by these entities, which is the right thing to do, because the large NBFCs to that extent are more systemically important. With this happening, there is hardly any difference in terms of governance and compliances which upper layer NBFCs have to do compared to banks. As per the current regulations, I don't think so there is a simple glide path for any NBFC to be a bank. I think it's assessed on multiple parameters. In our business model, we have kept the business model as if we will remain an NBFC, and all our products, policies, processes, governance standards are aligned towards ensuring that we remain better than the norms which have been set for the upper layer NBFCs. So as of now, there is no plan in our thought process of being a bank.
Right. Mr. Singh, Mr. Sabarwal alluded to the issue of the upper layer NBFCs. You are also an upper layer NBFC, and he is saying, which is right, there is no difference in terms of regulating a bank and an NBFC. Isn't that a reason why more NBFC should become a bank? Anyway, your opening remarks, yes.
So completely, I think there is a harmonization of policies and regulations between upper scale NBFCs and the banks. So today, whether in terms of asset categorization, in terms of capital requirement, there is still difference. But in terms of most of the governance, I think there is a harmonization between the upper layer NBFCs and the banks. So that to start with, because the size and scale of these NBFCs have become pretty large. There are quite a few NBFCs which are larger than mid-sized banks. So clearly the regulation which the central bank or the RBI is looking at, that similar kind of regulation, monitoring, supervision. But I think whether one wants to become a bank or not, I think it becomes a trade-off in terms of what it is that we are looking for. It's a trade-off between sustainability over a longer period of time and in terms of some governance and some regulatory differences which we have. But clearly, this trade-off is that every 5-10 years there will be a liquidity challenge in the NBFC. And you mentioned about the over-dependence on the banks in terms of liabilities. How do you really mitigate that? And these are the reasons why any NBFC should look at once it becomes large, because liability is the key for any NBFC or for a lending institution, because as a bank, you get an access to the retail liabilities or for that matter, liabilities, and you're not dependent on our institution. Because in a way, if you look at, I think the systemic risk, whether it stays on the NBFC or with the banks, because if something goes wrong with the NBFC, the impact will be on the banks because majority of the liabilities is coming from the banking system. So clearly, I think it's a trade-off. And one needs to really look at what is the sustainable, whether you want to build a business model which is sustainable over a period of time, or there are other ways, other options of allowing liquidity or liabilities for the larger NBFCs, which is different than the banks, but still it should be allowed, like deposit taking should be allowed. And I just, when someone was introducing the session and mentioned that Mr. Kamath mentioned in the morning that every NBFC should be treated like a bank, for sure. But I think what about the liabilities? Because until unless we solve for the liabilities, I think the large NBFCs, it will be very, very difficult for them to sustain in a longer period of time. Yes, in the current 3-5 years, you can sustain because the size is still manageable. But what happens when you go to a 5 lakh crore or 6 lakh crores? I think there the liabilities becomes very, very important and significant. And then see, why do you want to become a bank for that matter? If you look at, you get access to the interbank liability. You can, the RBI liquidity window which is available there. These things provide protection against any liquidity shocks. And you mentioned about IL&FS. I think these events keep happening every 5-10 years, and that puts a question mark on the NBFC model. So clearly, we will have to solve for the liabilities, whether a bank, whether upper scale, upper layer NBFC providing a differentiated license, but we will have to solve for the liabilities, in my view, and that will solve the sustainability of NBFC in the long run.
If I can
Yes,
just
Mr.
add,
Sabharwal will
just
yeah.
add to that. See, I think it is not appropriate to club all banks and all NBFCs in the same bracket. I can tell you the NBFCs present here and a few more never faced any challenge, whether it was the IL&FS problem or any DHFL problem. None of them faced a problem. And some of the large NBFCs have found it more easier to raise money than some of the smaller banks. So I don't think so it is only a bank versus an NBFC. It is the size and scale and the governance standards and the rating of the NBFCs or the banks. I can assure you that there will be some banks who are finding it more difficult to raise liabilities than some of the NBFCs. So it is not one category in which you can club all banks and in one category you can club all NBFCs. Similarly, just to add to what Rakesh was saying, there will be NBFCs wherein banks contribute just about 25 to 30% of their liabilities. And there will be NBFCs where banks contribute over 50% of their liabilities. So the dependence also varies depending on what your credit rating is, what your governance standards are, and so on. So I think we will have to sub-segment these, and which RBI started doing when they have, through their scale-based regulations.
Right, right. So basically you are saying that the men should be separated from the boys. Uh, the larger NBFCs which are backed by a strong corporate franchisee, they should be looked differently. But at the same time, since the Reserve Bank of India is saying that you should reduce your reliance on bank deposits, don't you think RBI should look at allowing more NBFCs to accept public deposits?
If you look at in the current scenario, there are various sources of raising liabilities. Banks are one of them. There are public NCDs, there are private NCDs, there are development finance institutions, both domestic and international. There is foreign currency loans, which you can raise. You can get an international rating and raise bonds in the international market. So I think there is a fair number of diverse areas on which or through which you can raise your liabilities. The other, which some NBFCs enjoy and some NBFCs don't, is retail deposits.
Right.
So if you create more sources of liabilities, dependence on any one source will reduce. That's simple logic, that's plain logic. If you reduce the number of sources of liabilities, you will become more dependent. That is irrespective of whether you are a bank or an NBFC. So I think one has to look at each set of NBFCs differently and allow for more sources of liabilities to get created. And that will help the ecosystem.
Right, right. Mr. Rivankar, on this context, if I can come to you, how has been your experience? You are the only deposit-taking NBFCs here in mobilizing public deposits. Is that helps NBFCs if they are a deposit-taking NBFC? Does it make a difference?
I think it definitely helps. It helps in the sense, it depends upon the brand equity, what you built over the period, and that helps you to raise your deposit. Not everybody can access deposit that easily. So the company which has reasonable standards of...
Your mic is properly functioning?
Yeah. I think the brand equity of the company matters, the reputation, the service that provided over the period, that helps in raising deposit. I think for us, deposit has been good support, especially because it is more sticky. Deposits are more sticky, and we are able to have a long-term deposit. Our average deposit tenure is more than 36 months. So definitely it helps. And we also expect the regulator to look at on more supportive manner, in the sense we raise only term deposit, we don't raise demand deposit. See, only when you are taking demand deposit, you need to be as liquid as banks. But if you are taking term deposit, then our lending platform, which is mostly on longer tenor or medium tenor, there is no mismatch. So for our lending and borrowing, there's the deposit, you don't see any mismatches. Our average lending is 3 years, borrowing is 3 years. So I think RBI should look into it more favorably on deposit taking is our view.
Right. Mr. Singh, you wanted to add something? Yeah.
No, I was saying, see, it will never be a problem for the top 5, 6, 7 or 10 NBFC. I think it's the issue about the industry risk. And in terms of today, the NBFC industry is still dependent on banking system from a liabilities point of view. And I think that is what we need to really solve for. And that's what, yes, a AAA rated companies all sitting here will be able to, and Rajiv is right, that during ILNFS crisis, during COVID, we never ever faced a challenge on the liability side. There was not one day when the liquidity was not available. but it's about the industry, it's about the sector, because I think this sector contributes close to, as was mentioned, around 25%. How do we solve for the sector? And in terms of deposit taking, I completely agree with Umesh that RBI should look at favorably, especially to the customers, where we are giving loans and we are taking exposure and taking risk on these customers. But their liabilities and their deposits are sitting with some other institutions, some banks and some other institutions. So clearly, when the lending institutions are taking risk on these customers, I think the liability should also flow to them so as to manage the asset liability and the liquidity. So I would, and this has been our request to RBI to look at this favorably, because I think, yes, there are multiple, sources of liquidity or liabilities which is available in the industry, but depending on which cycle you are, mutual fund used to be the big funder to the NBFC industry. Mutual fund has completely gone away. Yes, there is a private NCD, there is a public NCD, but I think just diversifying and giving much more control, that this protection against liability risk or systemic risk can be addressed. And I think that's what one needs to really work towards.
Right. The reason Mr. Singh is emphasizing on the liability part, the liquidity part, is because after 1998, RBI has not allowed any new NBFCs to accept public deposits. The number of NBFCs accepting public deposits have come down progressively. Now it is, I think, 48 or 48. After HDFC's exit, it's 48 right now. So that is the situation there is. So now moving from liabilities to the lending part, RBI governor also recently said, I mean, he generally is making this comment generally, that he's saying that the seeds of vulnerability are mostly sown when time is good. So is there a concern there has been credit growth is pretty high and robust, but is there a concern we could face a similar situation that we faced in the previous decade, that high lendings turning into NPAs, particularly the small ticket loans? Is there a concern on asset quality going forward? Mr. Revankar, why can you start it? Yeah.
See, if your GDP is growing at 8%, automatically the credit growth will be around 20 to 24%, 25%. It is the function. Without credit growth, GDP will not grow. So, I think the credit growth is around 20%. Now, the concern on smaller ticket may be unfound is only because it is, if the economy is not doing well, it is not the only people, the small ticket borrowers will face difficulty. Everyone will face a difficulty. But in the small ticket lending, you have enough margin. The cushions are high, so that you can manage it. So if you, the lending is risk reward. You take a little higher risk, but you have that margins to protect yourself. So I don't think there should be any worry on the same. We have not experienced any kind of challenges in the small ticket. We have been doing small ticket, but mostly secured. See, we don't do unsecured, and we also don't lend into open market. We do only with existing customer. So we have not seen any deterioration. We only are seeing a better, because of better data being available today. Unless in the past used to depend only on the personal interface. Today you have sufficient data. You have a bank statement, you have a GST data, or you have so many other variable data being available. You can process it. So, yeah. So the understanding of a customer is much superior today than what it was in the past. So you can't compare 10 years back and today. Today, I think most of the NBFCs are very strong in underwriting. And I don't really see any challenges here. But if there are new players coming and wanting to ramp up, then yes, there will be challenge. So that is left to individual companies' underwriting standards.
Right. Mr. Sabarwal, what is your take on this?
No, number one, I completely agree with what the governor mentioned. I think whenever there is high growth, it is very important to watch your portfolio very, very carefully. If you look at the growth per se, in the last couple of years, one would have seen that the growth has probably hastened. Maybe it's 25% plus what we are seeing for all the leading players. But if you see this number over the last, I would say 4 to 5 years, I think the growth moderates down to about 15% or so. Because during the COVID years, the growth was really, I would say very, very, very less. If we are seeing a huge demand for, premium cars, big houses, we should not forget that for 2 years, we didn't see any growth. And if you, do this calculation over a last 4 or 5 period, then the numbers which look much higher for last 2 years will moderate down to a much lower level. And we are already seeing this moderation in demand happening as we progress. So there was a fair amount of pent-up demand. For 2 years, people didn't buy, didn't go out, which actually gave individuals more money in their hands and so on. So we saw more growth happening in the last 2 years. I think what RBI is talking about more so is unsecured growth. And they've specified that if the growth is very high on the unsecured side, all lending institutions, whether they are banks or NBFCs, should be careful. And I think it is very, very prudent in terms of what they are saying. If you look at some of the numbers, I think on the unsecured side and the small ticket size, the delinquencies have moved up in the last 6 months or so. But it really depends. Again, as I would say, you can't club all banks or all NBFCs into one segment. If any bank or NBFC, irrespective of bank or NBFCs, has not had great credit standards, if it has a very high proportion of unsecured and an even high proportion of small ticket unsecured, then that lender has to be more careful. Again, I'm not saying that there is a problem, but they should be more careful and watchful of early indicators which come in so that they can ensure that their portfolio remains good. So it will really depend on each individual entity, but on an overall basis, I do agree with the regulator that anything which sees high growth, especially unsecured, one should be more careful.
One important point you mentioned is that you are seeing a moderation in growth. Is it the high interest rate regime which we are now? Do you think that is one of the reasons?
No, I don't think so, high interest rates. If you look at, the pre-COVID period, interest rates were much higher than what we are seeing today. If the interest rates are here and they come down here and if they go here, I would still say they are very reasonable and within the affordable range. But they might have gone up, but that's always going to be true.
But what is the reason for you to say that growth rate is coming down, moderating?
I feel for growth will become more similar to a more normal growth rate rather than a super normal growth rate.
Okay.
I think we saw a little bit of super normal growth rate because we didn't have growth for 2 years during COVID period.
Right.
So that is why if you take it over a 4-year period, the growth rate, comes down to a normal range. And we will be back to a normal range of growth, which is the right thing for the economy.
Right. So, Mr. Singh, what is your take on this? Whether there could be a challenge going forward in terms of asset quality, particularly when interest rates are elevated?
So interest rate is just one factor, but let me just try and address in terms of when things are good. And I agree with the RBI's concern, if a certain segment, a sector grows beyond the normal, I think one should really, and as they say, you should plan for the rainy day. So I think the institution should plan, look at their portfolios very, very closely, monitor, tighten, increase the provision covers. So all of that they should do but we have to understand the reason why a small ticket loans have grown in India so much. If you're comparing post-COVID, first of all, I think the consumer behaviors have changed post-COVID. People are ready to transact online, take loan online, buy article online. So clearly, the consumer behavior has changed. Also, India is an aspirational society, emerging income. If the economy is doing well, a lot of people, their income levels are growing and inching up. And so that's the reason you will see a lot of small ticket requirements which comes in. Majority of this goes towards buying a handset, a smartphone. If you look at 60-70% of the small ticket loans is towards buying a smartphone. So that's I think the consumer behavior is changing. Also, parallelly, we have to understand that the credit in India is changing. Because now we have a KYC, Aadhaar KYC, you have a digital payments, you have the GS, everything is now available online. Earlier, to do a 30,000 rupees loan, the cost of underwriting, the cost of delivery was more than what a bank or any NBFC would have earned on that loan. So the cost of delivery, the unit economics didn't make sense for any lending institutions. Today, because your incremental cost of onboarding a customer is fairly small, because once you have built the digital capability, you do a bureau scrub, that will take 2-3 rupees. You will check the bank statement, that will take another. So the cost, the incremental cost of customer acquisition has come down, and unit economics really works quite well for the lending institutions. So you look at credit changing, credit transforming, because you have KYC, digital layer, digital payments, you have a transactional history, consumer behavior changing. I think, and the emerging income population of India, I think all of this is playing out in terms of small ticket growth. And one needs to understand that clearly, because I think this segment was not being served earlier in a way. So, but what one needs to be worried about is the leveraging. So today, we would have given a 40,000 rupees loan, but in the next 6 months, the same person goes and takes another 5 loans. So I think the leveraging is what one needs to be worried about. How much of leverage, depending on his income, his or her income, how much the leverage is going up in the system and at the individual level. But as you mentioned, credit bureau has become very strong in India. I think the bureau plays a very, very strong role. Today, people think twice in terms of defaulting or delaying their payments because they know the next loan will not come through if they delay. So I think we have to understand the overall dynamics of the economy, of the population, credit changing. But yes, one needs to be watchful of the leveraging going up in the system.
I mean, in your experience, have you seen delinquencies marginally or inching up in the last few months and quarters?
So fortunately, we have not seen it. All indicators are looking much better than what it used to be pre-COVID in terms of bounce rate, in terms of front-end resolutions, in terms of credit quality. So we have not seen it, but what we have seen it is that the leverage, so we really look at, if we have given a loan to the customer earlier we used to do every 3 months, now we are doing every month in terms of tracking the leverage of the consumer, how many more loans the consumer has taken, because that puts a lot of stress on the repayment on this individual.
So leverage is something that banks and NBFCs rather need to look out for, while the changing nature of consumer behavior is spurring the growth, but one has to be careful about leverage. The other issue is with growing demand for credit and elevated cost of funding. Cost of funding are pretty high. How challenging is it to maintain the margins without sacrificing growth? Mr. Revankar.
I think for finance companies, the margins are sacrosanct. So they need to sacrifice the growth if they want. Because, see, the margin gives them the cushion. Ultimately, when you are lending, you are taking underwriting a risk. No, when you are lending, you are underwriting a risk. So you have to have your margin. It is a sacrosanct. So I strongly feel that you can moderate the growth. You should not sacrifice your margin. That's our fundamentals in lending business.
Mr. Savarwal, would you sacrifice growth for margins?
See, cost of funds has definitely been going up over the last year or so. It had come down sharply and it did go up. What one has been trying to do is ensure that the lending rates also move in tandem with the cost of funds. So we've been able to maintain our margins by ensuring that if there is an increase in cost of funds, it's passed on. If it decreases, it'll be passed down. So that's the process which one follows. I think and today interest rates are also at such a level that they are not impacting demand. And I hope we are near the peak, if not the peak. So let's watch that.
Mr. Singh, what is your priority, growth or margin?
No, I completely agree with Umesh that we can't compromise on the margin because you have a certain cost of operations, you have a certain credit cost, you have certain returns to be delivered. But I must tell you, I think if you see in today's, again, going back to the small ticket loans and the consumer loans and the personal loans and all, I think the consumer is not shying away from giving you that 50 paisa extra if you can provide him a ease of taking a loan. I think if the customer experience is good, if you can turn around and you can provide the loan immediately, I think you're and that's the reason if you see so many new fintechs and all, because they have worked on the journey, they have on the customer journey, making it simple for the customers, making it seamless for the customers. So yes, I think margins are very, very important, and we don't want to sacrifice margins for growth. I think in India, since the economy is doing well, there are certain segments, and most of the segments today are doing well in India. Sectors are doing well. I think there's no dearth of demand or growth. So I think if we have to sacrifice some growth, we are fine with that, but we will have to manage the margins. That's important because I think the entire model is based on the margin, and we really can't let it go. But I don't see that as a big challenge at this point in time.
Right. Now let us also talk about the customers. It's clear that the regulatory emphasis on compliance function and customer service is paramount. How well are NBFCs poised to deliver on this front? Mr. Singh, why don't you start this time?
So clearly, the way we believe we are because of our customers, and I keep telling my team and all my stakeholders that we are in the business because of our customers. So if you compromise in terms of the customer experience, you won't exist. You might do business today, tomorrow, but you might not be available day after because it's a competitive world. So clearly, I think regulation and regulatory requirement comes first, but the business, I think if you don't serve your customers properly, you don't provide them an outstanding service and a journey, I don't think we will be, because the customer has many options. And I think that's the reason the customer service, the quality is paramount. And we need to, yes, there can be challenges in terms of the customer needs, the customer demands have changed. They don't equate us like a financial. Earlier, if you apply for a loan, you might not know what has happened to your loan for 15 days. But consumers have experienced what happens with Amazon on e-commerce platform. The moment they place an order, they can track till the time the product is delivered. They have experienced the choice, customization when they see a OTT. So the consumers are exposed to different industries, and they don't benchmark us to the bank benchmarks and lending institutions. So I think we need to be very proactive. We need to be better than other industries because all of our consumers are exposed to other industries. And so need to really up the game on customer service. But secondly, I think regulator is also very, very concerned and paranoid on fair practice code in terms of how do we treat our customers fairly. And as I said, see, again, going back to differentiating between men and boys, I think from the time we set up these NBFCs, we brought the same governance, same compliance, same service standards which we were used to in banks. So I spent 16 years in a multinational bank. So when I came here, we set up the same kind of service standard. So I think it's very important that we create that experience for our customers. Otherwise, market is open. The customer has a choice to move to Rajiv or to Mehesh or to so many other people.
Yes, Mr. Sagarwal, compliance and customer service, RBI's two main issues.
So both are extremely important, compliance and customer service. See, customer is becoming far more demanding today because he has choice, he's experienced many things. The other thing which we are noticing is the customer wants an instant sort of decision rather than, an extended period of decision making. So most of our services we have tried to digitize so that the customer can do self-service rather than we trying to take his request and then trying to service. So close to about 90% of our services are now self-service, so that the customer doesn't need to interact with us to get those services through digital channels. The other is, I think the regulator has also brought in a number of things to make the whole system far more transparent. I think their whole emphasis is on being fair and transparent. And I think that's the right thing to do. That's the only way customer will gain confidence in the system and customer will be willing to transact more with you. So all these are good steps. We are spending far more money on service. We have strengthened ourselves on the compliance stream, added more people, digitized more things. I think all of these things are in the right direction. And I think on the aspect of compliance and service, I think there can't be any compromise, and we have to offer the best in class. In fact, we always tell the team that start with the proposition that whatever the customer is saying is right. And we have to start from there. And in that process, even if, the customer may not be right, but we have to give up some of our monies, it's okay. I think at the end of the day, we would want customers to be happy.
Right, thank you. Mr. Revankar.
No, I think it's a very fundamental to any businesses to maintain their customer and customize your product or reinvent yourself to service the customer. It is always a challenge to acquire a new customer because it's a risk. Whenever you acquire a new customer, it's a risk. But existing customer, maintaining, customizing, innovating, and trying to see that he is satisfied with our service is most important. Here, regulators' supervision is less of an importance. It is self-discipline and self-regulation is more important for us in maintaining the customer. I think it's a fundamental for survival of any company for that matter.
Thank you. I will open up and will come to the audience, but before that, let me ask one question. The exit of HDFC from the NBFC space, how does it help in terms of both, in terms of growth and resource mobilization? Yes, Mr. Revankar.
Yeah, see, HDFC was a very large, I think whether their position within the mutual fund industry or retail deposit, everywhere they are very big. And there is a vacuum now. So for other NBFCs, it is much easier today to raise resources because HDFC not being there, because there is an industry limit for all these mutual funds and even for a retail deposit also. So I think as far as the liability side is concerned, it is good for other NBFCs. Uh, and I think for the lending organization also, I think the people, the customers who would prefer to go to a NBFC rather than the bank for the loan, for them also it is a growth opportunity. Because many of the NBFCs are there in lending, housing finance now. Everyone has a bigger growth opportunity because NBFC are more friendly towards the borrowers compared to the banks.
So you are saying that from a customer's point of view, he would prefer NBFCs because of ease of doing things.
Yeah, because accessibility is much
Accessibility.
easier than the typical bank.
Typical banks. Mr. Sabarwal, yes.
No, HDFC was a great institution, and probably it's become an even greater institution by merging with HDFC Bank. HDFC Bank has, I would say, successfully managed the merger, and we can see them very active in the market in terms of growing their home loan business. They continue to do a very good job. I think where the vacuum to an extent has got created is in certain segments. For example, on the liabilities side, clearly the benefit is accruing to housing finance companies where they probably are able to raise money a little cheaper than what they were able to raise earlier. And in certain segments in which HDFC used to operate, where HDFC Bank has probably not, gone as strongly in, there are certain opportunities. But I would say the bigger benefit has been on the liabilities side. On the asset side, HDFC Bank has strongly taken up the space which was vacated by HDFC Limited.
Right, right. Yes, Mr. Singh.
No, so I agree with both of my co-panelists in terms of, yes, on the liability side, it will create opportunity in terms of because one large NBFC or a housing finance company moving away, that will create in terms of space, especially on the bond side and all. That is liabilities clearly is it provides, I think, because as Umesh was mentioning, every institution has a sector cap in terms of how much you can do, NBFC, housing finance. If that goes away, I think it creates space for other NBFCs and also clearly, in terms of assets, I think only the institutions, the two institutions have merged, so they will continue to do the business what they were doing. We will have to wait and see whether they create some space for others to capitalize on. But I think they will continue to grow the business the way they have been doing. Liabilities is a clear area of opportunity.
But do you agree with Mr. Revankar when he says it's easier to get a loan from NBFC than a bank?
Depends which NBFC you go and depends on which bank you go. There are, again, completely you can't define an NBFC and you can't define, Rajiv started by saying that, so you can't define. So I won't make that statement.
Wonderful, great. So in case we can have some questions from the audience now. Yes, I can see a hand going up. Yeah, yes, please identify yourself and please ask the question and address it to whom would you ask to?
Yeah, Rakesh, the question is for you. And
We can't hear you. We can't hear you.
is it okay now?
Yeah.
So I'm Girish Lakhotia. I am basically CEO of Prachay Capital. And the question is to you, Rakesh. Actually, you articulated the point well that whether to be a bank or to be a NBFC, because both are basically traders of money. The question is not on the side of assets because the governance model is almost the same. The question is on the liability side. Right now, presently, the upper layer NBFCs, they are right now borrowing or more than 75% of total banking exposure to NBFCs. If you are such a big NBFC that you are AAA rated or AA rated, then you should directly access funds from the market and not go through a primary collector or aggregator of funds, which I feel. So if your size becomes too big, you should directly, you should stop funding from banks and directly access the capital markets.
So what is the question?
That bigger NBFCs should have restriction on borrowing from banks.
Okay.
That is the right.
So this is the point which I mentioned, that there is a limitation in terms of scale. Once you have a large scale and you need a large liabilities, you will have to access a diversified sources of funding. And it will be, yes, you will explore all other sources of liabilities, but banks also is a large source of liability. So clearly, and that's a point which I articulated, saying that we need to look at how do we mitigate this over a period of time, because sustainability of a sector becomes very important, because what happens if another ILNFS happens, let's say?
And that
But
was also triple A rated.
the banks also slows down. Banks also stop lending. So I think we need to be self-reliant, self-sufficient in terms of managing the liabilities. And the business model most of the time is around the liabilities, not around the assets.
So there should be a restriction on
Yeah.
upper layer NBFCs
Yes, sir. I
consuming
mean, there
banking.
are other. Yes, sir. Please identify yourself and.
Hi, thank you for the wonderful discussion. My name is Praveen. I'm a former executive director with Nomura. My question is to any of the panelists here. Look, from the tone and tenor of the conversation, it appears that the big bulge NBFCs don't seem to be keen on applying for a banking license. But let me just pose the question differently. Assuming you were to apply for a banking license as a big bulge NBFC, what are the top 2 or 3 reasons for which the regulator would deny you that license?
Who will take that?
Deny or give you?
Deny you the license. So clearly you don't see the NBFCs wanting a license, but I'm saying hypothetically, if a big bulge NBFC or any other mid-size NBFC applies for a license, what are the top 2 or 3 reasons that would compel the RBI to deny that license?
It's primarily the policy of RBI and the Finance Ministry in terms of providing license and nothing else, because if you look at upper layer NBFCs, the regulation, the harmonization of policies, and Umesh mentioned in terms of, if you look at in NBFC, we follow Ind AS as well as IRAC both. So ECL, so worst of both or best of both, we follow both. So I think our regulation are quite in line with what banks really, from a governance point of view, from a board point of view, if you look at, harmonization is happening. So I think the way the RBI or the regulator will watch us for some time before taking a call or something. But if one is well regulated and well complied and every metrics is adhering to, the only reason can be a policy decision which the central bank can take.
I have a very small follow-on question. Given what you just said, right? It's almost contradictory to the earlier part of the conversation where there doesn't seem to be a propensity in NBFCs to become a bank. Now, given how the variety of liabilities will be available to you if you were a bank, and given what you just said, that there's no reason for RBI to deny you a license, why wouldn't you want to become a bank?
No, so I didn't say that. If you remember, what did I say? It's a trade-off between sustainability and the cost of governance, see, lot of NBFCs, and we are not talking about one sitting here, they have gone into very niche segments. They are going to smaller customers, marginal customers. Financial inclusion, if you see, has been achieved a lot by the NBFCs. So they have established that business models, and that business model works quite well in the current framework. I think you have to look at NBFC as a sector and not as an individual NBFC.
Understood.
Thank you, sir. Thank you so much. So if I can understand, he's basically asking what is the fit and proper criteria, which is essentially a black box. No one knows. Anyway, we have completely run out of time. So thank you very much. Ajay, we have a last question
Hello.
from the lady. Yes, please.
Hi, I'm Shweta Sajde from Millennium Mams. Mr. Kamath mentioned this morning that technology is going to be the key differentiator for all NBFCs. For all of you, sir, does that mean that the big NBFCs are going to...
The bigger ones are going to get more bigger and the smaller ones. So who want to take that? Mr. Agarwal, yes.
I completely agree with him that You know, I completely agree with Mr. Kamath that technology is going to be a big differentiator. In fact, I would say technology and service levels will be the big differentiators. And if this is true, then size really does not matter. If you look at all large banks and you look at small banks, it's not true that only large banks have the best technology and the small banks don't. Same is true for the NBFC industry. So it is not about size. In fact, if technologies and service is a differentiator, then it can very well be accomplished by even smaller players. And we are seeing this in the market. A lot of innovation is happening by fintech lenders. So, and it doesn't mean that innovation is not happening from the big players, but it is also true that a fair amount of innovation is happening from fintech players. So it is a great leveler. Technology or service is becoming a great leveler. And the ones who are able to differentiate on it will gain the most.
Right.
The only thing which I want to end, by saying is, our business, whether it is banks or NBFCs, is not so much about anything else but risk management. If you err on the risk management side, then God save you. And if you do well on that and even compromise on growth, you will last long.
Thank you,
Thank you,
Mrs.
sir.
Sabharwal. We have completely run out of time.
Just
So,
small. I'm so sorry. It's not a question. This is Avesh Meman from Relox CB Private Limited. It's not a question to them, but it's just a suggestion which overall sum up the thing that we're talking about bank merging into NBFCs, but we feel from an ecosystem of if I come from an EV industry, I feel NBFC has helped us or the industry to grow very on a bigger scale and a faster scale because of the bank taking a lot of time. And as everybody's talk about, focusing on the customer, we being a customer from the same industry has helped us. So I feel, if it comes into not merging and focusing more on the NBFCs,
So
that
it's
will be
easier to do
helpful.
business with NBFCs than
Definitely,
banks.
yeah.
Thank you so much. On that note, thank you so everyone for joining us in the discussion, and thank you to all the panelists. Thank you.
Thank you very much.
Thank you so much, Manoj.
Just stay, please. Just stay a minute. Can I have the mic, please? Yeah, thank you very much. Discussion clearly moved beyond the catch-22 situation, and on sustainability and more sources of liabilities. Could I just some token of appreciation, please? Just stay, please.
No, please.
Thank you very much. Our next panel on digital payments will begin in the next 10 minutes. Our next panel discussion is on digital payments, the next leg of growth. How drastically digital payments have changed our life in a transformation that has happened across social strata. The RBI index shows that digital payments grew by over 13% in the last financial year. And now India's digital payments market is looking beyond the country's borders to France, UAE, Sri Lanka. And there are countries that now accept transactions via UPI, India's homegrown digital payments technology. On that note, I would like to request our panelists to please come on stage. We have with us Mr. Kalyan Kumar, Executive Director, Punjab National Bank. Mr. Jatinder Handu, CEO, DLAI. Mr. Sharath Bulusu, Director, Product Management, Google Pay. Mr. Vishwas Patel, Joint MD, Infibeam Avenues and Chairman, Payments Council of India. And Mr. Arif Khan, Chief Innovation Officer, Razorpay. Moderating the conversation will be Business Standard Banking Editor, Mr. Manojit Saha. Over to you, Manojit.
Hello, can you hear me? Please.
Sure.
Yeah. Can you hear me now? Okay, okay. Please have your earphones on. Yeah, I think we are set. We are set. Yeah. So thank you once again for coming here and listening to us. So this panel discussion on digital payments, the next phase of growth. Digital payments is one of the India stories which is discussed globally. The kind of progress we have made in digital payments and digital lending over the last few years. It's not even a decade. I don't think in 10 years back we were using UPI or a Google Pay, you know. It's not even 10 years. It's just a few years that have made these strides in payment system. Particularly after the pandemic, the pace has picked up, as we all know. Today, the entire world talk about India's real-time payment systems. It's incredible that UPI processes 10 billion transactions a month. The poster boy of India's digital payment story, the UPI. 46 of the world's real-time transactions happens in India. So these numbers are simply mind-boggling. So in this context, we will discuss what is the next phase of growth for digital payments. But before that, let us hear from the panelists what actually led to this huge growth of digital payments so far. So what are the factors which has led to this kind of a digital payments? Mr. Kumar, if you can start.
Thank you. First of all, I would like to start with one great report which was published by UN before G20 summit. That was policy document. It is actually really wonderful thing. It was mentioned there that India has achieved financial inclusion 80% in last 6 years' time. Otherwise, if it would not have been through digital public infrastructure, it would have taken 5 decades, 47 years. That itself speaks that the kind of enablers India has created, like 457 million Jan Dhan account, also having more than 1 billion mobile bank, that to 780 million smartphone, and also internet availability, reduced internet availability, this created very congenial atmosphere for growth of this payment infrastructure. And rightly said by you that the daily transaction of August month, it was 10 billion transactions. And value-wise also, if you see, so that is the gem trinity which we call, and also the kind of infrastructure NPCI created in name of UPI, open infrastructure, where private sector banks also, private sector NBFC and private sector entity collaborated and gave innovative products like Google Pay, Phone Pay, and all these innovation actually also got the opportunity. And regulators also played very important role here by providing the very enabling provisions so that rest is the history. And FIS actually gives scores every year. There I'm happy to share that maturity score of 5, India got number 1 and 5 itself. Like USA and UK and other developed countries, I have got 4 out of 5. So that itself speaks a lot about our digital journey in our country.
Right. Mr. Khan wants to make a point. Yes.
Am I audible? I think if you go back, right, and let's take UPI as a reference. So one cannot forget that somewhere around 2010, India embarked on the digital identity in the form of Aadhaar, right? I think it's one of the most simplest building block on identity you can witness. And I think by 2015, it was close to what, 500 million or some odd numbers then, right? And during that time, I think was the the thought process of this building blocks of digital public infrastructure came in the mindset, right? We started thinking of it not only from a technical point of view, but from a philosophical point of view, right? I think that helped. And then there were a few other things, right, that really helped the ecosystem. So for example, India from 2010 to 2016 with the Jan Dhan Yojana accelerated from a 20% bank penetration to maybe 80% bank penetration. Typically what would have taken us 3 decades got compressed to maybe half a decade. With that is the entire mobile data, the geo revolution that happened, right? And then 2016, we had demonetization, right? So all of these combination of things have come together. It's not that payments were not happening in the country before that, right? If you look at IMPS, it was already doing reasonably well. But I think all these things came together, and because it was now looked at from a DPI point of view, the private-public partnership became more simpler and easier, right? And basis that, companies like Google Pay, payment companies like the one Vishwas runs and later on us, they really started coming into play. And I think that's what has really accelerated and taken it to 10 billion now.
Right. Yes, Mr. Patel.
I think I would just like to sum it up what gentleman before me just said. I think it's a mixture of all these things. So the secular trends for the growth was already set from 2010 onwards, right? There was already 350 million middle class going to now almost 460 million by 2025. There was accessibility, urbanization, 36% of the Indians will be living in the urban areas. So that way the accessibility is better. Plus, of course, the geo effect, the 5G growth, the cheapest data in the world, map it up to the 1.13 billion smartphones, which Indians will possess by the end of this year. Plus, you add a lot of government incentives, which Arif just said on, right from starting from Jan Dhan Yojana, where 400 million, because of those 400 million bank accounts opened, 400 million debit cards were issued. And because of the 400 million debit cards, today we have 230 million UPI handles. That's why UPI was possible because of that. And add a lot of things. It's just not this thing, but even Aadhaar, eKYC, e-signing, now ONDC, account aggregator. So there's continuous innovations by the government and its supported institutions to continuously keep this growth going. And of course, 2 other external factors. One was man created in the form of demonetization and God created with the phase of COVID that accelerated the whole pace. So overall, this has been the theme where today we have grown to 46% of the world's real-time transactions happen in our country. So it's a matter of great pride for us that the digital payment boom has grown to this level.
Yes, of course. Demonetization and COVID are one of the 2 external factors which has propelled this growth. Yes, sir.
I definitely agree with what everyone said before me, but thinking about it through the lens of a product manager, my career is about building products. Two things that stand out about India's digital payment revolution for me are one, and maybe this is the point Arif wanted to make about the philosophy behind it, of aiming for interoperability. That made a very big difference because at the end of the day, a payment is between two entities. And just making sure that it didn't really matter who you banked with, what app you were using, what phone you were using, that these things would at their core be interoperable, made a massive difference. The second thing in my opinion is, even before UPI came along, there was an extremely, and still is, an extremely fast real-time payment system in India, IMPS. But the challenge is, if you want to pay someone through IMPS, you go through a fairly time-consuming cycle of setting up the beneficiary at the other end. And by converting that into more of a real-time process of saying, look, I don't need to know Vishwas in real life, set up all of this beforehand. I just need to know their phone number and boom, it's done. Or I need to know a VPA or scan a QR and it's done. In my mind, in addition to the factors that we spoke about, the seeding of bank accounts, the availability of connectivity and all of that, in the product itself, I think these were the two factors that really made a big difference.
Ease of doing the transaction, essentially.
Absolutely.
Ease of doing the transaction. Yeah. Mr. Handu, yes, sir.
Thank you so much. I think in addition to what has already been said, since I represent a kind of a policy institution which is DLAI, I would like to add a perspective of a public policy perspective to this discussion. I think the payments, let's go back, little back, not very far away. I think 2003, 2004, 2005, when government started taking some initiatives in terms of alternate business models and started with a business correspondent model in India. I think those were the days, I was also in some way involved in that, that cycle where entire focus was G2P payments. The drivers of payments, government to public payment, NREGA, National Old Age Pension Schemes, Social Security pensions, so on and so forth. So that's how it, the revolution took shape from those days. Then slowly and steadily, RBI had a payments vision document, 2019, 2021. Similarly, there was a committee headed by Nandan Nilekani, which also came up with some recommendations like increasing per capita number of transactions in India. It was very less in 2019, there was 10x increase in number of transactions, but the targets were audacious. Important policy, public policy considerations like subsidization of MDR rates on public, transactions. Education, financial literacy piece, and taking it to the doorstep of a customer. These were some of the steps. Now coming leg two, the government's role in this from digital public infrastructure side. So three broad pieces. One, identity piece, which was again Aadhaar came into picture. Second, payments piece, the UPI story, which I'm sure everyone in the room understands that piece, so I don't need to reiterate. And third is the interoperability of a data platform. That's what we are trying to do with, things like that. So all these developments clubbed by, the role, the stellar role which fintechs have played in this country, along with NBFCs and banks. And I think in unison it should be seen, other than operational aspects. I think if you look at the policy and the vision aspect, this is something which is driving, payments in this country, and it will further drive this more, DPIs, infrastructure kind of a things, and more innovations in the place. I think I would like to pause here with these thoughts from the public policy lens. Thank you so much.
Thank you. So now we know what are the sources for this huge growth in digital payments. Let's move on to the next phase. So, what are the things we need to do to take digital lending, digital payments to the next phase? What we need to do to support the growth of digital payments to the next phase?
Actually, if we see, our digital payment market is $3 trillion. By 2026, it is expected to by $10 trillion. That huge scope is available. If I can answer your question, actually merchant side, if we see, is still 20% penetration is there, and by 26 it is expected that may go up to 65%. And in merchant side, also other areas like their supply chain part, payables and receivables, and also inventory management or CRM type of things, that is actually still happening. And in those areas, if you penetrate more particularly in tier 3 to tier 6 cities, there huge opportunities are still available. And good news is these things are happening. And also now we know Bharat and India resides at villages.
Right.
At agri value chain also it is happening, like agri value chain and also dairy value chain. That part is also getting digitized. Those things actually, there lies the scope, and these things are happening in our country. And also two enablers I will like to tell. One is RBI has come out with one digital infrastructure scheme that was January 21. And aim is to improve the touch points, digital power touch points, and also the vision, payment vision 2025. These two are very good enablers where we are sure that we will be achieving the next leg of growth of our revolution, payment revolution. Thank you.
No, I think, in addition to what Mr. Kumar said, I think when we look at payments, everyone knows it, it can't be seen in a standalone basis. Payments coupled with commerce, and e-commerce is something what I'm referring to. So to accentuate or take it further to the next steps, I think more, it will happen in a due course. Reason being, today if we look at 65 to 70% of India is young. You have India has the highest internet penetration in this country, the cheapest handsets availability, ownership, from the ownership perspective, it is the young people who are owning it. And even if you look at in absolute numbers, about 600, close to 700 million, users on internet. Out of that, roughly 485 to 500 million users on social media. Even if you look at the top 3 e-commerce platforms in this country, and I don't want to name them, and everyone knows that. So roughly 400 million something, 300 million, 167 and things like that. What I'm trying to point out here is the trend which we are looking at, payments married with e-commerce. That's part one. Second part, which is indispensable, and I think as we move forward during this discussion on payment side, and actually it's universal for digital financial inclusion, but specific to payment side is the data and cyber security and cyber frauds. I think as we go forward and as we have seen, I would like to draw attention of this August House to the standing committee report which was put forth by the standing committee on July 27, MOF report, which specifically highlighted these challenges. And I'm sure I'll discuss that in subsequent questions. But these are some of the issues which, or some of the enablers which which must be kept into consideration if you are looking, more furtherance of this the payments in this country and of course outside of the country. Thank you. I'll pause here.
Yes, Mr. Balasu, what we need to do to go to the next phase of digital payments?
So there's probably a set of things to consider if you're looking at the next phase of growth. I don't think by any means the story on inclusion is done yet. In spite of the impressive numbers that we were just hearing about, there's still a large number of users who are not included in digital payments.
Right.
We still have to worry about people who've not got smartphones. We still have to worry about social and cultural factors that leave people out of the world of digital products, let alone finance. So I think that is one, and that is going to require us to think not just about how society is transforming itself, but also to build more trust into the ecosystem, drive more education, more awareness. The second factor is for anything to scale at this size, and with the economics of India being what they are, it's very high scale. There are still areas of great friction, etc. I think it's critical that this industry as a whole becomes self-sustaining. And I think sustainability economically is going to matter a lot. Because to be able to operate at India scale, I don't think anyone's got deep enough pockets if you can't figure out a sustainable path there. The third thing that I would think of is most of the growth that we've seen driven in digital payments until now has come out of people paying out of their bank accounts, out of the money that's already in their bank. But that same thing has not yet touched credit. There is a responsible way to expand the credit market. There is a way where it has to keep pace with both the aspiration of the nation, the increase in consumption patterns. But once those two things get connected together, I think there was a very astute point about payments exist for some purpose, right? They don't happen just on their own. Most of it is driven by some type of commerce. And so I think the moment credit and digital payments start getting connected together.
Is UPI and credit is a good starting point? On credit card.
That's a great starting point, right? Because you bring all of the ease and the trust that UPI has built. See, it's a very large, diverse country like India needs systems that can foster trust, convenience, that familiarity helps with inclusion. And I think bringing credit through UPI does definitely make a big difference.
I think there was some move to do an overdraft kind of facility through UPI. Yeah. Credit line. Yes, Mr. Patel.
Okay, I think to foster the next level of growth in the digital payments, I think the one and the only thing that's required is the change of focus. Today, if you see a Prime Minister talking to a guy in a metro, he's just saying that just leave your home without a wallet or cash and you'll be able to survive for 5-6 days just by paying through UPI everywhere and everything. So the focus today is on the ability to pay. We need to change the focus to ability to collect. So today, if you see the acceptance levels, even in tier 3 to tier 4 level downwards, in the real Bharat and other places, that acceptance level is still not there. Right? We need to make it very easy, convenient, as well as cost effective for not only the merchant but the ecosystems. Like, how can you make it easy? Like, say, if a coolie is just picking up his luggage, and after that luggage, why can't he just take out his phone and accept a credit card payment from the by just tapping on his phone, right? So the ability to collect, where 1 billion Indians today have the ability to pay, because that is sorted more or less, because we have under Jan Dhan Yojana and others, we have like almost 700 million plus debit cards in the market. We have 250 million plus real UPI handles now. We have wallets, we have credit cards, which is growing to almost like 1,60,000 crores of credit acceptance in the market every month. So ability to pay, like anybody can just walk into a Tamil Nadu cooperative account and just get a bank account zero balance and get a debit card or a UPI handle for free. So the ability to pay is gone. Ability to collect is where we need to sort it. Because even RBI is pushing it. I am part of a payment infrastructure development fund where we have thousands of crores in our balance which we are paying off to grow the acceptance level. And acceptance level can only grow with 2 or 3 things that government needs to do. Right? One thing is to promote, as you said, merchant education. Taxation is what the merchants mindset in the villages and the towns is, khaya piya bhul gaya, jo bhi raat ka cash kiya aa gaya. The moment it goes into the bank account, then there is a taxation level and other things. So that kind of education that we all need to do to the merchant, but anyway, you are very small merchant, your transaction comes within the tax limit bracket, you are not paying any taxes, basically. So one is that limitation on that tax, that education needs to be done. And those paying tax also, those collecting money through electronic channels should get some taxation benefit. Just like how it was done in South Korea and Sweden, right? That way the acceptance level will increase. Third thing is, most you see everywhere on the acceptance level, a lot of resistance is there by the ecosystem players because of the pricing level set by the government. Right? Today UPI is happening. UPI happened because thanks to players like Google, PhonePe, who use the money, who use UPI as a acquisition tool to make it grow. It is very good, simple, fantastic. But to get the first user adopt to go and tie up to a UPI ID, a lot of effort was put in. Because my members at PCI, we have a 5 billion negative balance sheet over the last 5 years in helping in growing UPI. So a lot of effort has gone in to make UPI what it is today. So today when government, every other government when wants to push electronic, they make it a low MDR. So there is a limited charges where the controlled MDR where everybody survives. Today making it free, right? And this is hurting the ecosystem.
We will come to the MDR and UPI and its cost part in a bit. But let's hear from Mr. Khan before I take it to Bharat, the point you have raised.
So I think before we move to this question, it's important as a part of the first question, we also appreciate the role of the regulator and NPCI to help the digital, acceptance in the country overall. Right? Coming back, what next? I think from what all the speakers, my co-panelists have said, I think the macroeconomics clearly suggests that we are in the right place. We have the right tools. We have the right solutions with UPI credit, UPI and credit card, UPI Lite, offline, and all the tap and go, all of them coming in, right? I think an important piece is India has always been credit starved, right? Among other reasons, one of them is the cost of customer acquisition. The heart of credit is the credit underwriting. That's been pretty costly. But I think with all the KYC, the technology which makes data machine readable, I think that's going to lower the cost of acquisition, the cost of processing. So earlier it was practically feasible to do a credit limit of say $700, $800. Now looks like even $200, $250 becomes feasible, right? So I think the way I would look at it is that we have to move fast but slowly. Credit is not very simple. We need to understand underwriting and then scale it up. So what you call asset side loan. Another very important thing, which is more on the policy side, being an average citizen, right? What I see is the shift in the political mindset, for whatever reason, but it looks to be very positive in my mind, is rather than, giving a citizens fish to eat, they're teaching them to fish. So the skilling and all these activities that are happening, I think in the long term, again, we'll need to be a little patient. It takes time. Maybe it's 2 years, 3 years, 4 years down the line. But I think we have all the necessary ingredients now. We'll have to continuously build on it, and we will be in a place far better, right? So that's the way I'll put it.
Right. So as I promised Mr. Patel that I will take it to Goa. So instead of Goa, let's go to Bharat. Let's go to Goa instead. If you go to Goa, you go to the beaches and do the sports, you will hardly find anyone who accepts digital payments. It's all cash. So the journey from India to Bharat, how are we going to make it for digital payments? And why there is so much dependence on cash, despite cash is still the king in many parts of the country. Why it is so? Mr. Kumar, yes.
Yeah, thank you. Rightly said, not only rural places, but also at several places at city also, cash is still king. There are several reasons behind it. What I understand, in my opinion, first reason is cultural preferences also, you can say. And in our country, we find there are a lot of limitation in infrastructure also. And third, what I understand, जो दिखता है वो बिकता है. Cash is tangible, and there are concerns I mean to say, about the safety and security of digital payment. That area, my earlier speaker also, Sarad has already told also. Creating awareness about the safety and security, building trust in these things are also actually very, very important. And then only we can see the shift or scope, whatever is available towards that. And cultural preferences, there are so many, if I am talking about Bharat, not only Goa, then there are several social customs and religious kind of thing where cash is given. So that is also one of the reasons that still cash is the king. But main reason what I perceive is still lot of awareness and trust is required to be created among the mass, and then only we can find good substitute of cash towards digital side. Thank you.
One of the customs we find in India is elections. Every year there are numerous elections. Some of them will start in few months. And cash during election session is a big thing. So, Mr. Handu, why do you think that cash still rules?
No, cash still rules, and that's evident from the cash in circulation in the entire economy. As far as if you compare it with the number of transactions that are happening electronically. But I think Mr. Kumar has very aptly, succinctly, put it in the trust and cultural issues. Now, coming back, a large part of Bharat lives in rural areas. 50% of our population are women. So let's look at them. So having spent a substantial part of my career in microfinance and, being a part of MFI meetings and groups and collections and payments, hota kaise? So I used to ask them question. One, कि कितनी महिलाओं के पास मोबाइल फ़ोन अपना है, पति का या बेटे का मोबाइल फ़ोन नहीं, your own mobile phone. So roughly it was like in a JLG group of 10 to 12 women, 1 or 2 were, those who actually owned mobile phone.
Which year was that?
Just 2 years back.
Okay.
Maybe 1 or 2 years back. Others also had access to mobile phone, but that mobile phone belonged to either her son or her husband. That's the reality number one. Second, as you know, the user experience is very important. If a fraud or a failed transaction happens even once, it gives a very bad name to the first time entrant or a newly entrant into digital payment space. Third, I would like to highlight here, the kind of frauds which are happening in rural space, especially, with AEPS. Nothing wrong with AEPS system, absolutely foolproof. But then, when an illiterate person or a low educated person goes to a particular point to, cash out, she puts her thumb or he puts up her thumb, the operator on the other side said, "Ki transaction fail ho gaya, hua nahi." And the gentleman comes to home, ki theek hai, nahi hua. But in the moment, the money gets debited. So these are the kinds of examples, which actually are hindering. Other, of course, there are cultural issues, and other than that, not even the women customers, but I would like to give a small example, maybe 30 seconds. When I was working with one of the largest private sector banks, HDFC Bank to be very honest, and there is I was dealing with the big agriculture value chain, and I had a client in Ludhiana, Sardar Preetpal Singh ji, I can remember him. He was a big flour mill owner. So one day, his account opening kit and everything our officer gave him, and immediately said, "I don't need a card, I don't need internet banking." And this is 10 years back maybe. "I don't need anything." I said, "Kyun Sardar ji, kya hua?" He said, No, ye fraud ho jata hai, paise nikalta." This was a perception in even, few years back. And even if you look at the rural areas, if once a digital experience or this kind of a user experience get hit, it's a big, hindrance. Plus these kind of frauds which are happening. So literacy, awareness, these are, and you don't need to put up flashy, campaigns. Simple use All India Radio, local radio kind of a communication, local melas and hearts. I think these are kinds of the things. Once we take the other part of Bharat along with us in this digital payment journey, I'm sure, we have more and more numbers coming up.
Right.
Thank you.
Mr. Balasu, is connectivity is also a problem? Do we have enough connectivity in the rural areas in the Bharat so that these payments can happen seamlessly?
I think connectivity probably comes from 2 angles, right? One is, do you have coverage? And maybe that answer is quite good now. I think there are pockets definitely where coverage could improve, but by and large there is connectivity. But the quality of the connectivity matters as well. And the resilience of a payment system to operate in the face of a set of dropped packets or an unreliable connection matters equally. So if your payment ends up in a stuck state because you lost connectivity for a few seconds and then it can't recover fast enough, that, like other speakers have alluded to, breaks trust in the system. But on the other hand, I also think that overall the payments ecosystem in India, UPI included, have made huge strides in becoming far more robust in the face of connectivity drops, etc. And I think there's new stuff coming as well, right? More recently, there's been talk about enabling completely offline payments in UPI. These are mechanisms that will definitely help solve for connectivity. So by and large, I don't think connectivity is as much of an issue. The major issues might lie in one side of it is the cultural aspect, and I think not just awareness through mass campaigns, but even within products. For example, we will warn products in more than one language if we think they're about to do something that might harm them. The second thing is also, I think structurally, we've got to think about something Mr. Patel was saying when he was mentioning acceptance. If I receive money, I also have a need to be able to pay it forward somewhere. And so if I'm a small shop and my supplier accepts cash, for whatever reason, then I need cash in hand. If you pay me digitally, I'm still going to go to the bank and withdraw money to be able to pay my supplier. So I think until the entire supply chain gets digitized, and when you talk to a lot of businesses, you will hear them putting a lot of emphasis on digitizing the information flow and the financial flows in their supply chain for that reason. Because until that happens, the small shopkeeper is still going to value having cash in hand because it saves them time, it saves them effort, it just makes them feel like things move a lot faster.
Yes, Mr. Patel.
I think what they have said is very right. Cash, because with the growth of digital transactions, cash has also grown to the surprise of everyone. Like in demand days, it was like 18 lakh crores of cash in the market. Now it is 32 lakh crores of cash in the market circulating. And you look at the other figure also, where the ATM withdrawals per year. So salaried guy getting a salary and from his bank account when he's withdrawing, why should he need to withdraw? But 2,64,000 crores as on March 23 are being withdrawn every year from ATMs. That's a huge figure. But if you are converting a digital money into a cash, right, and then going to the local kirana and paying. So then again that leads us to is the acceptance part. When he said the whole supply chain needs to be digitized, there can't be one or two breakages in between who start accepting cash suddenly from this thing. So acceptance again comes back to the same thing what Mr. Kalyan Kumar also said on the acceptance part, is that education that is required. And I think some incentives on taxation to help the merchant accept it, to make it more cost effective. There are many things. They get instant money in their bank account and save money on handling cash. Lots of benefits are there. But if certain taxation benefits are given, second thing, acceptance, why why the ecosystem is not going down to the tier 4, 5, 6, why there's special incentives given out in Northeast, is because of that only, because the ecosystem. Like if you see China, right, there are a couple of decacrons there in fintech who actually earn billions of dollars. We have one decacron here in India who's losing 1,000 crores plus, and 3 or 4 fintechs who are all losing crores. Right? Unless and until the ecosystem does not make money, it's not going to be sustainable to go down to the bottom of the pyramid too.
Right, right. Mr. Khan, is anonymity one issue why people are still highly dependent on cash? We see basically the low value transactions are done on digitally, but the high value transactions people like to still do in cash. Is anonymity one issue?
See, I'm not too certain about that. If there is someone having a challenge in making an anonymity transaction of say 200 rupee denomination and not of 2 lakh rupees, then it's not a question of anonymity, right? Because then 200 rupees is not in the scanner. Maybe at a different scale, it is a problem. But I think what we are talking about is the interiors, the tier 3, etc. and all those kind of things. I think, as I said, right, I think we need to move fast but slowly. It takes time. This is infrastructure. I think look at the last 5 years and the last 10 years where we have come. This will take some more time, but I think there is gradual improvement. I paid to a fish vendor around 3-4 days back by QR. But obviously that was in Bombay, Warsaw. Maybe it's not happening in Goa yet. But I think what we also need to understand, there are a lot of startups, fintechs. See, again, the government alone cannot do this, right? So the customer education, building out apps which is in local language, and India has there is Bhashni, which is our own standard for language conversion, which is coming along really great. NPCI launched a couple of products on top of it, right? It requires a lot of capital. Now you can't expect the government to bring in all the capital. It's a lot of investment, right? I think Vishwas was mentioning when this fintech revolution started in India, there were a bunch of companies that spent crores and millions of dollars educating customers, putting QR out over there, and that's what we benefited. So what it means is, and now with the so-called, winter in terms of funds coming in and so on and so forth, I think somewhere on the policy side, maybe, and I'm sure it's already happening, maybe some AIFs, etc., where the retail people like you and me, small investors can put some money behind it, could really help. So I think that's one thing. As far as the connectivity issue is concerned, I think India's adding, 4,000 kilometers odd highway every month. And my belief is wherever the highway goes, you'll have more penetration. And along with the highway, the softer penetration in terms of towers coming up, connectivity coming up will happen, right? So if India is doing 48,000 to 50,000 kilometers, that means in the next 3-4 years, we'll be in a really very good place, right? So the tier 3, tier 4 conversion that we seem to talk about right now, I think we are not very far away from that. That's my view.
Right, right. So now for a moment, we will try to understand we have talked about digital payments. Now we will talk about a bit of digital lending, because that's an area which has the regulator has a huge concern. Last year, I think they have come out with the guidelines, exhaustive guidelines on digital lending. But Mr. Handu, what is your take on this? The digital lending guidelines did not have much impact on the loan volumes and all, isn't it? What is your take on this?
No, I think first of all, we are very thankful to RBI that there was at least a framework for digital lending, in this country. And as far as, members of DLA and others are also concerned, fintechs by and large, everyone is complying with these guidelines. On uptake of loans, if this is concerned, there are many reasons for that, but I think there are post-COVID, there has been, some sense of caution, and then many, because it just came last year, and there has been segmental, growth taking place in different segments, or albeit with a caution. But that's what I would like to say on the growth. But as far as guidelines, and not just guidelines, after that guidelines, there were a couple of other, guidelines also which came and facilitated the market penetration, like the FLDG one and the FLDG one and the other one which they came recently. So I think these developments which have taken place in digital lending space actually make it more exciting and more, transparent, open, responsible. Plus, the more discussion, I'm not sure if you're going to cover in this session, but I think the discussion and the expectation of a self-regulatory regime of an SRO, which, RBI governor,
I will come to that.
I'll pause here.
Yeah.
So I think that's the interesting one, if you want to include that in this discussion. Thank you.
I will come to that. But Mr. Balasu, how do you control these illegal digital apps? The Reserve Bank of India is so much concerned about this illegal digital apps. I mean, how can you control those?
I think that it's a multi-pronged approach, right? There is one part of it which is about setting up the right frameworks, whether that comes from the RBI or through SROs, like Mr. Handa pointed out. But the second part of it is how do you identify the legit players from the ones that are not? I think being able to digitalize more and more of the ecosystem that enables that identification in a digital manner is what helps you, because apps are just one way, right? It's easy to think about an app store and go, hey, here's a store where an app is listed. The same thing could be happening on the open internet through a website, a mobile website. You don't operate a Play Store or an app store for that. And so I think being able to establish the identity of the players behind each of these kinds of operations is critical. And a lot of that goes with both the robustness and the effectiveness of identification as well as enforcement. And I think definitely as a nation we have work to do there. And as those frameworks become stronger, I think this becomes a lot better. The third one, at the end of the day, and this is not to say customers are solely responsible for this, but I think for a country of our size, our diversity, and our challenges, the answer lies in digitizing a lot of these things. I mean, credit today digitally is tiny compared to the needs of the country. So I think going digital is absolutely necessary. And with that comes the responsibility of making sure that we are along the way making users more aware. We are building these applications in ways that make them understand this more easily, that they are able to demand their rights in a seamless, simple manner. Don't have to jump through 500 hoops to be able to get access to any support or help that they need.
Right. Now we come to UPI. A specific issue that is in everybody's mind is the specific issue which is there in everybody's mind is how long UPI can continue to be free, because the volumes are rising. With rising volumes, you need investments to service the customers. So, do you think it's time now that UPI should have a fee? Mr. Kumar.
Yeah, thank you. Actually, I will say a very difficult question. I will say there are three perspectives to it. First, we must look at from customer's perspective. Naturally, if it is free, it will help them. Second is from business also, it will businessman will have low operating cost. And from regulator and government perspective, if we look at, then certainly if it is free, then more adoption and what is need of the hour, that will happen. So both pros and cons are available. If we talk about pros, then see, suppose if we start charging fee, then certainly as we are investing a lot, both private sector and public sector, certainly cost may get set off. That is one aspect. But if you ask me, still lot of adoption, lot of scope for adoption is pending. So that's why if I say in my personal opinion, at present it will not be nice decision, though regulator and government looking at the perspectives of all the stakeholders can take a decision. But looking to the scope available, in my opinion, at present stage, charging will not be a good gesture. However, NPCI has already implemented for 1.1% of interchange fee on UPI for prepayment instruments if charges are more than 2,000 rupees. That is my view on this line.
Yes, Mr. Patel.
Okay. Okay. So first thing is that UPI today, customer never pays for any payment option. It's a merchant who bears the MDR. So today UPI MDR is not borne by the merchant, but it's borne by the government. It's subvented in some way by the government, right?
Right.
So with a lot of difficulty and meeting with the Honorable FM and others, in the last to last budget, we were able to get 1,300 crores as incentives for for promoting digital payments, which in a way was paying off the UPI subvention. Last year it increased to 1,500 crores, and this time we were able to convince the officials there that transactions have increased. So in this budget, Honorable Finance Minister was able to raise it to 2,400 crores. But there lies a problem. I think last 3-4 quarters money has been disbursed, but the disbursement goes to the banks by METI or the finance officers, right? The problem is that it stops there. That's the real problem, because if you see the numbers released by NPCI, who are the real players who have grown UPI, who real process UPI? Like if you see the private players like PhonePe, Google Pay, Paytm, Cred or everybody, right? 95% of those hard work of putting the QR or getting the customers on the UPI bandwagon is done by them. But today, none of our members, including us, have got even a single paisa of that 2 years back, 1,300 crores or 1,500 crores, or maybe this 2,400 crores will let know, because it stops at the bank level. Kalyan Kumarji, it's like appropriated by the bank. I understand they have the cost, but we are doing the hard work out there, and I think we deserve some part, because as we said, funding summer was going on, money was there, our members blew around. We have a minus 5 billion in our balance sheet across all our members for growing these digital transactions, but we looked at it as a tool of customer acquisition, this UPI. But going forward, for sustainable growth, there has to be a low MDR. We don't want the government, because what happens is, let's look at the other way. You are making zero MDR for big merchants like, say, big marketplaces which have billion-dollar budgets, right, for UPI. And the government is paying. Where is the government paying? It's paying taxpayers' money. So essentially, taxpayer money is subventing UPI transactions of big merchants who can easily afford it. Why not do it only for small and medium merchants at zero MDR, where we can grow it? So there are a lot of logic behind it, and everywhere worldwide digital payments has grown. It's not that everybody, even the Western countries, have reached 100% of their digital limits. In fact, there is no cash in Sweden, I am told. Right? So it has grown. But if there is a low controlled MDR, what RBI had earlier said of 0.2% on that MDR, on 100 rupees, if the merchant gets 99.80, yes, he will afford it. So much convenience.
Right. Yes, Mr. Khan.
I think Vishwas was trying to tell Mr. Kalyan Kumar something. So since you're in the bank, maybe you can take it to the banking fraternity, and if any bankers over here. I think I would second Vishwas on this completely, right? I think some part of it coming back to the fintech ecosystem, it would really be helpful. Is it good enough? Probably not. But there's another interesting trend, right? See, I'm not at the policy level, so I don't know how this will work. Maybe you can comment on it. But I think if you look at the new set of things that have come on UPI, which is UPI credit and UPI and credit card or auto pay, I think these inbuilt have an interchange possibility. And I think personally that India is a huge, I hope none of the bankers are listening to this, otherwise this will give them a reason to postpone it further. But if you look at it right over a period, say over the next 3-4 years, 25-30% of the UPI transactions become either auto pay, which is a recurring transaction or a mandate kind of transaction, or they shift to credit card. I think there is a bit of interchange or a MDR. The unit economics will come into play. But as we speak now, I think it is a challenge, and there has to be some consideration for players, the market players. I'm not saying the banks are sitting on a lot of huge kitty, but there has to be some even distribution that needs to happen over here.
Okay. The other issue which was raised by Mr. Handu some time back is on the issue of SRO, the self-regulatory organizations. Now, Reserve Bank of India Governor recently said the fintechs should have an SRO. Now, please let us understand, will you have a SRO for the entire fintech community? Because fintech community is not homogeneous. There are account aggregators, payment aggregators, and many other lending institutions. So, or you are going to have separate SROs for each fintechs, and how will that coordinate?
No, thank you for asking that question, and we have presented our view clearly on this. The philosophy, at least at the ontological level, if you look, the reason for existence of an SRO is, the support function initially for emerging segments of a big industry. And the precedent which we have so far in NBFC microfinance sector, RBI has already recognized 2 SROs, and that also has a history, and I don't want to delve into it, but those segments which are growing in the growth phase and fintech, digital lending, and to be very specific, what personally I look into, the way I look into it is activity-based specific SRO, because each activity, and in fintech, if you look predominantly there are 2 streams coming up. One is digital lending, and second is payments, and both have different contours. Now, if you look at the existing SROs, and as I was mentioning earlier, the capability building part, the support part is very critical. When RBI comes up with a regulation, they actually come with a regulation, and if there is a non-compliance, there are strict penal actions being taken by Reserve Bank. Now, it is a responsibility of these SROs to make sure that there are adequate capability developments that are taking place, that there are specific, they handhold these entities to meet those regulations. And as I said, as I said, we are for an activity-based, specific, lending, digital lending-based, SRO. That's point 1. But I think more than that, we also need to look into the kind of enabling. I'm repeating this piece, that the enabling role which SRO plays, and if we consider that, it's but obvious that you need to have a separate SROs, if not for all segments, but at least for the major segments in the financial services. So I'll pause here. Thank you.
Okay. So we are running out of time completely. One last question, the closing remarks from each of the panelists. Request you to keep it very short. What are the biggest challenges or threats to maintain this momentum of digital payments? Yes, Mr. Kumar.
In my opinion, biggest challenge is actually security risk. And also there are a number of frauds are happening. And if I can say second biggest challenge is regarding infrastructure. And awareness also. So these 3, in my opinion, these 3 are the major challenges in digital adoption, I feel.
Okay. Mr. Khan.
So I think I'll allude on the infrastructure side. I think we need to understand, especially on the payment side, some of the infrastructure is a very old chassis, right? And so some of those chassis would need to be upgraded. With that will come security, reliability, and so on and so forth. So that's one. The other is a little more softer, with our numbers, 10 billion UPI transaction, 400, 500 million IMPS transaction. I think we should not be in the hubris that we've done it all right. I think we have to accept there's a long way to go. I think as a society, as a community, everyone coming together, we are making the right moves. we need to, at the end of the day, India is a democratic country. So I think this debate should go on, and we should continue learning from this and improving on that, right? If we go back and start thinking that, hey, we are the world dominators and we can do this, we can do that, I think that would really be a folly. We should not fall for that trap. That's my only worry.
Right. Mr. Patel.
I think with less than 200 million Indians transacting digitally, the way ahead to grow it to around 600 million transacting is where the real focus should be. So the challenges remains on multiple fold. Each ecosystem player has their own challenges. Banks have to improve their core banking solution. If NPCI's goal of reaching 1 billion UPI transactions a day is to be achieved, so that core banking solution needs to be upgraded. Banks need to put enough money into their IT infrastructure to grow that kind of thing. Even from the acceptance perspective, the MDR issue and many. I think most of them have been already discussed. But that's
Right.
what we need to really focus on, all the issues that we discussed.
Right. Mr. Balas.
In my opinion, the biggest barriers will be each one of the barriers we think of when we think of financial inclusion. So some of these will stem from language. The next big wave of users we'll see on the internet transacting in India will not necessarily be as comfortable with English as most of us are. They will speak a variety of different languages. I think it was Mr. Arif who mentioned the Bhashini project and many more like that that will help solve it. The other one is there are a number of social factors, like the example that Mr. Handu provided about the number of women who have independent access to mobile phones, to bank accounts. Even now, there are a number of challenges where people who have joint accounts cannot actually use UPI as easily as someone who has a unitarily owned bank account. So I think as we solve for challenges with inclusion, all these other pieces have to fall into place, but that is critical. One point I'd say though is when we talk about security as a barrier to inclusion, the challenge in India, and I'm saying this not just as someone who works in payments, but as someone who spent a career in technology, the challenge is not technical security. Actually, whether it is banks, NPCI, all of the different players we've seen in the ecosystem, the standards of technical security have been very high. The challenge has been social engineering. People falling for someone selling them a nicely spun yarn. And I think that is why at multiple points all of us spoke about education and awareness, and that will continue to be the case.
Right. Mr. Andu, the last word from you.
Thank you. In addition to what has already been said, I would reiterate that I think the single largest hindrance could be the cyber security and frauds. And in fact, unless there are different different contours to that, like multiple agencies involved. 10 districts in this country contribute over than 80% of cyber frauds. As long as we are having more Jamtaras and other jurisdictions like Jamtara, it's going to be very difficult to have a trust of an Aam Aadmi in Bharat on the digital payments. I think that needs to be addressed.
Right.
I'll pause here. Thank you so much.
Right. Since we have completely run out of time, we will take one question from the audience if there is any. Yes, gentlemen. Please identify yourself and raise the question.
I am Anil Tulsiram. My question is on digital lending actually. When OCEN was launched, it was expected that it will accelerate the lending, but still organizations like Paytm and others still go for the bilateral. So it was expected that, say, Swiggy or Zomato will be able to use the protocol and launch some digital lending, but it's not yet happened. Only one product was launched, I think, which is Gem Sahai. So what's happening in the OCEN and what it's not, why lending is not picking up there? Thank you.
I think if I'm not mistaken, right, I was not directly involved in that, but since I was in NPCI, I had a adjunct view on that. I think the idea behind one of the programs, not larger OCEN, was to do a prototype and see how it works. Right? And I think they got reasonable results for that. So if you look at it, there are 2-3 other things that are happening in parallel, right? And it's scaling up. The account aggregator framework. Right? So I think that's come into play now. So I think over a period of time, you'll see more of this happening. OCEN was more like let's do one, let's learn from it, let's understand, and then fine tune it, according to me. So with this account aggregator coming up, I think there are multiple FIUs already over there. If I'm not mistaken, I think latest is the GST also has got added in the account aggregator framework, right? You already have the bank as information, and then you have your mutual funds already participating in that. So I think all this put together, it will take off. It will take some time. I think if you go back, right, and you look at UPI, even in 2016 when UPI was launched, I think in the first month, there were some, and we're talking about 10 billion now, that time it was some 25, 30,000 transactions after launch, after the beta launch, right? So some of this will take time. It takes time to adopt, to understand the system, to put the processes in place. So I think we need to be a little more patient over here, but it's certainly around the corner. Faster the better.
Thank you so much. We have run out of time completely. I mean, the discussion on digital payments can go on and on. I mean, but of course, every good thing has to come to an end. So I thank you all my panelists, Mr. Khan, Mr. Patel, Mr. Balasu, Mr. Handu, and Mr. Kumar for being a part of the discussion. And thank you very much for joining us. Thank you.
Thank you very much. Our next panel discussion will begin at 5 o'clock on using cloud and data centers. Takes off from this discussion. really the backbone of everything that we've been talking about since morning, and literally takes off from our last session, which is digital payments. The tech support that sustains all of this. So the topic is using cloud and data centers to tame disruption and deal with security challenges. I would request our panelists to please come on stage. We have Mr. Ranjit Bellary, partner EY. Mr. Rajesh Mirjankar, MD and CEO, Kia.ai. Mr. Sujit Williams, Director, BFSI India, Entity, Global Data Centers and Cloud Infrastructure India. Mr. Raghavendra Singh, Global Head, Cloud Security, TCS. And Mr. Prakash Bharat, Director, Freshworks, India and SARC. Moderating the discussion will be Business Standard Tech Editor, Ms. Shivani Shinde. He's yet to come. Okay, one of our panelists is yet to come, and also I think it'll be helpful to wear the, the headphones given the sound from the other room. Yeah.
Am I audible? I'm audible. Thank you so much. Thanks. So, good evening, everyone. This is a very interesting session. And as I was sharing with them, I prepped for this session really long yesterday, and Mr. K.V. Kamath in the morning just changed my intro. And, the line that he said in the morning was, and I'm reading out because these are exact words, he said, banks are running on technology that is 20 years old. Now, I just caught my breath on that statement because that's a very loaded statement. When terms like cloud, generative AI, and everything is becoming, an everyday lingo, and banks, we assume, are there at the cusp of technology. A seasoned banker is making that statement. But I think it's a food for thought for all of us here in the audience as well as sitting here. And I want to pose this question to each of the panel here, since we're talking about the two most important words here, which is cloud, data center, and cybersecurity. So I want to, this question is for all the panelists, and I want them to introduce themselves as well. In your experience and client interactions, have disruptions reduced as data has moved to data centers, then to cloud, or is it has further complicated? Ranjit, can you please?
Hope I'm audible. Yeah. Thanks, Shivani. So hi, quick introduction. I'm Ranjit. I'm a partner with EY. More than 19 years of experience in the field of digital forensics, cyber forensics, data privacy. So very relevant question. I think, see, when you look at traditionally how things have evolved over the past, I would say 4-5 years, pre-COVID, the digital transformation was picking up pace. But I think post-COVID, it just accelerated at unprecedented levels. And we've had, a lot of clients quickly adopt to, platforms like cloud, where they had to obviously enable remote ways of working, ensure that accessibility is the foremost thing for their employees, customers, right? And that meant obviously cybersecurity had to sort of take a backseat because business was more important, right? And that's where I think we've seen the emergence of ransomware as a potent tool. Now, from a disruption standpoint, I think obviously cloud has disrupted the ways in which it's easily accessible for clients. They are able to quickly scale up, bring in environments. I think it's easy for them to access, from anywhere. People can, obviously employees can access it from home. And more importantly, I think it can be scaled up quickly. And it's an agile, sort of workplace. You can spin in new servers, new VMs as needed. And that's where I think the accessibility has been there. And also predominantly, the way the technology has evolved today, I think it's not that difficult for you to bring up a new digital marketplace, just like within days, right? And I think that's the flexibility that cloud has to offer. And at the same time, I think when you look at the challenges, right? The challenges has been the pace of transformation has been really at a very different level. And obviously security is something that is trying to catch up, given that cyber criminals are coming up with new ways to sort of do the damage, right? And today, it will not be difficult to say that each client may be having multiple cloud environments. They may not be just having one cloud environment because the way it's easily accessible for them to go on and then build something new. And that's what I think from a security standpoint has brought in a lot of challenge. And we will continue to see disruption, but at the same time, the accessibility part and also the ease with which they can do business is only going to amplify, right? And I think we need to look at both pros and cons. And over a period of time, I think both from a transformation standpoint and also from a security standpoint, things are going to evolve. And I'm sure the panelists will add their view in terms of what are the latest we are seeing.
Hi, good evening, everyone. This is Sujit Williams from NTT Global Data Centers. A very interesting question, Shivani. And if I have to talk a little bit about NTT and our data center journey, so we have been in this country for more than 2 decades now, and we have seen the journey growing. And as Ranjit rightly explained, post-COVID is where we have seen that there has been a jump in how the clients have been started adopting outsourcing. I would put it as outsourcing because it's outsourcing your on-premise workloads to either cloud or to a data center. And we have seen the transition in the last 2-3 years going in leaps and bounds. It's been a phenomenal journey. If I have to talk about NTT, we have 16 live data centers in the country right now. In Mumbai itself, we have 10 data centers. And it has, and post-COVID, what we have realized and what we see our clients talking is data center is something which is a very mission-critical services. I mean, the banks know about the banking. They're more focused on the banking. They want to focus all their energies on the banking activity. So they want to leave the specialized service to the specialized service provider. So we have definitely seen a good amount of adoption in the last couple of years, the way the demand has grown, and the way the service providers are able to give them the ease of managing the data center. There's something which I stole from one of my colleagues. Power in India is not a luxury. It's a necessity. And the bureaucracy which goes around getting power. I mean, for running your operations, you need power. And we as data center providers, we work with the government machinery, and we are able to ensure that there is an uninterrupted power. And data center is not also just about giving rack space. It's about giving the precise cooling, the kind of environment that you need to run your operations. And that's something that we have been able to facilitate to all our clients. And we feel that this is certainly a boon to our clients. And we feel that in the years to come, it's definitely going to be a growing journey. Thank you.
Hi everyone, I'm Prakash Bharat from Freshworks. I represent the transformation and the disruption that these guys have been talking about. If there is one person or one company which has actually benefited because of all of these changes, is probably Freshworks in India, right? So as a company, we started about 10 years back. We are heavily invested in cloud. We are a cloud first company for that matter. We have a couple of products. One is a customer support solution, another is the ITSM solution. So anything that we do is around cloud, right? So probably all those new suit cars, thanks you to all the disruptions that he was talking about. Now, probably the question I'm going to flip, or probably the thing that I'm going to ask to the panelists again is, as a company, and just it's quite funny that I'm talking about this because I used to be a banker myself. I spent about 15 years in banking, and I was part of the journey. And one fine day, I wanted to buy one of the customer experience solution. I went to Freshworks, I saw the demo, I kind of fell in love with the company, and that's how I came here, right? Now, the thing is, what we are doing with fintechs and other new age companies is phenomenal. We have kind of redefined how customer experience or employee experience should look like today, right? But given all the data privacy and all the other challenges that the country is going through, probably during the discussion, I want to just pose this question back to the panelists saying, are banks, are financial institutions really going to hold themselves back from looking the new way of solving the customer experience problem, right? So probably that's something I'll discuss about, and I'll leave it to you from here.
Hi, I'm Rajesh Mirjankar, MD and CEO of Kia.ai, with roughly about 3 decades of experience in banking solutions development, and our company focusing on core fintech-based solutions. I can say that from a perspective of cloud adoption per se, we have had cloud adoption for core banking in small banks right from 2012. And so when if you again look at the next point in terms of digital payments, 2016 was the point at which really people had adopted cloud. So when we look at the impact of COVID, we've actually seen the benefits of adopting cloud earlier, where there was zero impact on customer services with either the banks or digital payments and otherwise. So I do feel that that was a proven case for business continuity planning from a perspective of not just availability of staff, but also the last mile connectivity for various aspects where it's required. So in some ways, I think COVID has been a litmus test for cloud per se. And it's right now, I think the time for banks to take bold steps towards adoption of cloud. When we look at the next generation of cloud adoption, typically when we look at aspects like Web3 environments or artificial intelligence driven decisions, the cloud is the way to go literally for the aspect of scale of data as well as scale of decisions.
Can you hear me? Yeah, okay. Hi, I'm Raghavendra Singh. I head cloud security practice for TCS. And thank you, Shivani, to start with really interesting question. Now, cloud, right? Why organizations ran to adopt cloud? Because all the enterprises, they were always looking for the kind of speed, the scale, the scalability, the resilience cloud could offer, right? So obviously that was the choice, right? To unlock the full potential of data. They never had that computing power or that agility and flexibility. So they got it through cloud. Now, see, point to note is, it's not just cloud which has brought change. The whole ecosystem around cloud or enterprises have changed. The platform where data used to run, right, that whole platform has changed. The whole data has been distributed, the identities has been distributed across, that COVID has pushed us to go digital in all the way, starting from workplace to employees, etc. The regulatory landscape is changing quite quickly, right? So these are a lot of aspects which are making cloud very, very powerful to enterprises, and they are using that power, they are enjoying it. Now, everybody has that power. Even adversaries has that power now, right? So they are enjoying that power as well. So if you see the whole ransomware, the whole data breaches, that has gone up. Now, in terms of whether cloud is offering right level of protection, see, the right now, if you see, we are in cloud 2.0, which we call in TCS, because cloud 1.0, hyperscalers were evolving as well. There were cloud native offering, there were a lot of PaaS and SaaS services. But if you see, more personalization is done basis the countries, basis the regulation. There is a sovereign cloud offerings, there are industry cloud offerings. So there is a customization done. In terms of security also, if you see past couple of years, there is a huge uptake within the hyperscaler ecosystem. So I would say, see, cloud is offering you a power. Complexity is there because with power there will be responsibility and complexity, but they are offering you ways and means to mitigate that. You have a better resiliency, you can have a right level of architecture to control your environment better.
Thanks, gentlemen. So it looks like the consensus here is against what Mr. Kamath has said in the morning. But let me just bring that to context here. Mr. Kamath was making a very interesting comparison, and that was between fintechs and banks. And there is a joke among all the banking fraternity, and people here will agree, every fintech wants to be a bank and every bank wants to be a fintech. This has been happening for quite some time now. So I'm going to come to you, Prakash, since you work with both the environment. And you know, you've been a SaaS provider. As you said, you are a cloud native company yourself. How do you see cloud-based solutions helping BFSI and fintech both? Now, you have PhonePe and you have HDFC Live, so you've seen both the horizons. So how do you think cloud is helping them to bring that rich customer experiences? If you can give some examples here.
Sure, I'll probably take the example of PhonePe. I think gentleman is speaking the other hall, right? So the proximity probably will help. So here, see, we went to PhonePe probably 6-7 years back, probably the time when digital payments became a thing in India. Now, when we started, they had about 1,200 support agents on floor, and they were delivering about 40 million transactions around that time, right? And one fine day, our respected Mr. Narendra Modi said it's demonetization, right? So overnight, from 40 million transactions, they suddenly moved to 400 million transactions. Now, imagine even if 1% of those transactions had failed, imagine the number of support reps they should have had on the floor to start supporting the number of volume of queries that's going to come in, right? Now, for the first time, I felt India did not have enough engineers coming out to be put on the floor for these support agents, right? And that's a real scare. And forget about just hiring. Within a short time, they had to really train them and so many other stuff. So the original case study or the original problem statement with which we started working with PhonePe was rather different. They just wanted to make it an omni-channel solution. They wanted to make sure the agents are ramped up very quickly. And at the same time, they wanted to deliver at scale and speed. So this was as simple as it, but just that the demonetization made it a lot more complex, right? So the first thing that we did with PhonePe was we brought in the automation part. We brought in chatbot because the transaction had already skyrocketed. And there is no way that I can have a support rep take about 200 queries a day, right? So the first thing we wanted to solve was we wanted to cut down the number of queries each of the reps are working on. So within no time, PhonePe was able to automate 85% of the queries that was coming into them without any human intervention, right? So imagine the cost savings that brings in, and forget about cost saving, it's also about the efficiency on the floor, right? Do we really need so many people to solve this? So they have automated about 850 types of queries today. It started with very simple query like, where is my refund? And today, a lot of complex queries. They have about 1,000 SKUs spread across different businesses. And I spoke about efficiency. I'd also tell the other problem it is solving today. Now, when you go to PhonePe, like I said, because there are 1,000 SKUs, it is humanly impossible to train a support agent on so many different businesses, right? And that's where an AI-enabled or modern tool really comes in and then solves the problem. Today, our tool can really assist the agent when he's working on, let's assume there is a query that he hasn't answered in the past. Our bot can very quickly suggest a solution for him and telling, this is the possible answer for this. And also, it can give him the possible next steps. So the agent run time or the agent training is straight away taken off, right? So how, in the end, the beneficiary is the customer. He is getting a seamless experience, he's getting instant responses, and he's getting responses on the channels of his choice. Like today, 4K support on you on WhatsApp or Facebook or any of the channel you want to engage with them, right? And I don't know, most of us use PhonePe. When was the last time you called customer care to get an issue resolved? We never do that. And say that's the same with Paytm or Swiggy's of the world today. It's not just with the banking. And probably if there is anything I want to do today, probably I want to thank KV Kamath for what he said. Banks are 20 years behind when it comes to technology, right? In a way, it's true because I've been a banker myself. And every time when I see something as exciting as this, I used to just run to my bank, to my legal folks saying, hey, these guys are doing this, why can't we do this? And obviously, again, legal or the compliance or the cloud, a lot of other reasons for us to hold back also. So even today, when we work with banks, in fact, I have one of my colleagues sitting in the room, he was trying to win an account with one of the banks, I don't want to name them, but just because of this compliance, they're not able to move ahead and then bring in this automation that is possible, right? So probably that's a question back to the panel also. How are you going to help us bring in this automation and help your life get better, right?
We're going to come to that as well because I have another additional question, but I'll come to Rajesh. Rajesh, now you've been in this ecosystem for a really long time. You worked with, small banks, big banks, medium banks, and of course now you're moving to fintech. If I have to take Prakash what he said, is it really difficult for banks to move to a digital ecosystem? What's been your experience? And of course, this whole cloud, yes, COVID agreed, but he has a valid point. Opening up a bank account, frankly, isn't as easy as they try to show it on the ads on the TV.
So I have a different take on that, but I'll come back to the point that probably Mr. KV Kamath alluded to. See, the fact is that when we say banks are 20 years behind or things such as that, I don't relate it necessarily to technology. And I'm not saying that because we provide banking technology. That's certainly not the reason. It is about the design of the systems and the SOPs that are currently present from a perspective of following all the banking processes that may be archaic at times. So when I say typical questions are for a large bank, when was the last time they changed their core banking system? More than a decade ago. 2003 was when these systems came in. I remember that because we either got onto the bus or missed it, right, at various points. So that's stark in my memory in terms of when it started. So if you go back on time, it's exactly 2 decades, right? Now the same system in terms of design is probably working here. And when I say design, I'm not talking of technology of Java or .NET or etc. I'm talking of the way data is stored in terms of relations between customer to account to other things. When you look at the evolution of how fintech has come through, it is about the velocity of transactions being able to be done, account opening to be so flexible that you are able to do one-click fixed accounts. So from that perspective, I think I take the 2-decade point at face value. But having said that, I think from a perspective of digital adoption, right from 2016, we've had night outs, I would say, week outs or month outs when it comes to UPI rollout or whether it was the new versions of payment systems that came in or the various acts that were adopted by the government from 2015 onwards. Demonetization is one aspect to it, but I'm saying the others were really far more tedious than demonetization in terms of implementation, and there banks have really stood the test of time. If you look at it from a perspective of disruption of services, you would not find a bank being down when they were rolling out UPI. And now they are talking about 99.95% availability when you are using UPI. So the credit goes to the banks for maintaining the technology as either having wrappers of technology or various things to keep it up. Now let's see where the word archaic comes into play. It would come into play where you look at adoption of new regulations. DPDP to one, I think we can discuss that in more detail, but if you look at the way you have to store data and then meet all the aspects of regulation, there are questions to be asked of saying, will these current systems be the ones to be compliant? But I think time and again, when we've called obituary on either banks or banking technology, it's proven to be actually the one that will stand straight, right? For one, I think, however archaic the banks are, they know how to make profits. They know how to contain their losses. They also know how to turn around things. The second part is in terms of customer service. I think the trust is with the banks and they've been able to render that so far. Now, when it comes to cloud adoption, I think the banks are in a position of strength to adopt cloud. The reason being that there is a need for scale, and cloud provides that scale straight away. The next point is about the regulatory pressures on data security, etc. Cloud does provide a quick, I would say, fast track to it in terms of ticking the boxes very quickly on various aspects. So I do think while banks have taken time to get to where they are in a good position today, and the cloud would certainly help take them to the digital age much faster.
Right. And just to put Mr. Kamat's entire comment in context, he was comparing them to the fintechs. So he did have, so that point comes out here as well. Coming to you, Sajid, you know, data centers are an amazing breed of players in this whole digitization landscape. If I have to use an analogy, it would be like they're the pipelines that is fueling the cloud. I mean, that's how I look like. Maybe I'm wrong, but you can certainly tell. And a little data point for the audience here. You know, India's data center stock is likely to double to 23 million square feet, translating to a total investment potential of 10 billion. Now, I'm just trying to conjure up the terabytes and zettabytes of data that these data centers are going to have. So the question to you is, how do data center players make sure that, you know, cloud providers / your clients, they can be your fintechs or your banks, ensure high availability and redundancy? I mean, what is it that you're doing differently as well?
Thanks, Shivani. I think the way you summarize the whole thing, I will have a couple of people from the place here, from the audience here, trying to build a couple of data centers. It's not just building a building. I mean, I was talking to somebody today. There's a lot of things which go into a data center, and what you actually asked today, how do you ensure that the data center is redundant, and how does it ensure that it gives the critical 4 nines to a client who's setting up his infrastructure there? So there's a lot of things which go into the whole planning and the way we look at it. There are 3 things which primarily a client looks at: the power, the network, and basically the operation skills, because you have to run the data center also. These are the 3 main things which today any client would want to look at when he's planning to go into a data center. And that's where entity in the last few years, so we just signed an MOU with the government of Maharashtra, where we have said that we'll pump in $3.5 billion into Maharashtra. That's only Maharashtra alone. If I have to look at from a scalability perspective, we today in India, we run 204 megawatts of IT load. That's the kind of capacity that we have. And we are looking to up it to 280 megawatt by March 24. 80 megawatts of IT load to be added in the next 5 to 6 months. So you're right, your numbers, what you're talking about is right. But then it also means that the people who are coming in need to be able to withstand this financial spend which is required. We have seen in the past, quote unquote, there are people who have come in, tried to set up data centers, and we have seen them, we have seen the clients trying to run those data centers post a period of time. Because it's, as I said, it's not just building a building. We have to provide power. So if I have to churn out 204 megawatts of IT load, the kind of bills, the power bills that I have to pay every month to the country, to the power producing is enormous. So to specifically answer your questions, entity being what we are and the financial stability which we bring in, that is the first thing that we are trying to do. From a design perspective, we are a Japanese company, and there's a lot of technology which gets vetted by our peers in Japan. For example, we are building a data center in Noida, where we are putting seismic dampeners. We know that that is a seismic prone zone, and over the last 2 weeks there have been multiple tremors which have been going on there. So we have ensured that those data centers can take care of the Indian context. So reliability of the building is most important. We need to have a building which is completely reliable. If I look from network perspective, we are completely neutral to all the service providers, be it any of the leading service providers. We bring in network from multiple paths into a data center to ensure that the redundancy is maintained. We invest in people. There's a lot of training, cross-skilling, which we do for our people to ensure that we are able to give that 4-9 kind of uptime that a client looks for. If I have to say in the last 20 years, that last 2 decades that we have been running the data center operations in India, we have been able to give 100% uptime. I mean, end of the day, that's what the client wants, that he wants his infra to run smoothly without any kind of a disruption. So while, Shivani, you threw up a lot of numbers and you are right in those numbers, that's a kind of demand that is there, but I would also put a word of caution that it requires a lot of skills to run these data centers, and people should do that kind of a little bit of a research before they move into the data centers. It's important.
We'll come back to that part as well. It's one of the question here. Raghavendra, you come from TCS, work at a global scale. I mean, everybody does, but with huge scale. What's been your experience when you talk to clients, especially the BFSI, and when you look at their entire journey of this cloud and digital transformation, as we may say? Are they getting it right? Are they somewhere in between? What's your take on that?
So I'll explain it with example, Shivani. So we have our flagship, very good customer, global German bank. They operate in India as well. Now, the moment they decided to move to one of the hyperscaler, obviously the very good contract and negotiation with hyperscaler side. As a service provider, when we were engaged, and through this story, I can tell you what should we avoid and what should we try to do right. The number one, the whole line of business sponsorship came through right away. Right? That whole investment, whole alignment on how we are moving to cloud, why we are moving, what is our 1 year, 3 year, 5 year plan. How it helps? It helped to centralize the decision making. It helped to future proof your technology and other investments. So the whole organization, whole IT knew that this is something we are building for future, and we have to make sure that there is an appropriate level of next gen technology and enablement is done. The number two, when we see the customers moving to cloud in a hurry, right? So a lot of technical investment, right? One of my colleague mentioned here, because cloud gives a really one-click type of enablement, and by the time you get your next bill, you realize that how expensive it is. So whole consolidation, the screw tight FinOps and SecOps, right? That is very important to make sure you have really optimized the technical debt. So the consolidation of technology, because you see, there are tons of technologies and players out there. Right? Number three, very, very important, when to start moving data to cloud, right? There is a moment, right? You cannot move the data and then security could be afterthought. So making sure the entire guardrails are enforced, security is built, then only you can move your production data, right? So the customer, they automated their entire control plane through us. Whole security was done. The CRO organization came and helped us do entire residual risk assessment. Once it was made sure that only the risks which can be accepted are left over, they started moving the data, right? So security cannot be afterthought, right? So whole alignment, the sponsorship, whole future proofing, if it's there, right, it's happening. Whereas there are organizations, business has pushed them to a limit to move something to the cloud, right? And we have seen the similar example for insurer from UK. We have seen, in fact, I was personally engaged for assessment of their entire landscape, and it was So let's do some data security technology investments, right? And so first step is to do the data classification. But entire CISO organization was like, okay, we are not the owners of data. How we can take the decision, right? So that sponsorship, because data ownership is quite distributed within organizations, you see. So those line of business owners, once they agree, they sponsor the whole classification, whole protection act, it's become really easier, right? So whole strategical aspects, I think execution is one part. We all talk about talent, technology, so many different aspects, but whole strategy, whole future proofing, that is really key. And we see a lot of organizations are in a site of bolt-in security rather than built-in, and we should avoid that. Definitely we should avoid that.
Rajesh, a quick one. Now, he's given a global perspective. In India, would you say these are the mistakes even when large banks are looking at this transition to cloud? Or is it much more structured? Because India, fortunately, doesn't have legacy. In his case, those banks have huge legacy.
Yes.
So is it easier there?
So I tend to think that India is better equipped to take the either the move to the cloud or if you look at one of the reasons for India having a more stable ability to sort of move across technologies is the gradual, responsible method in which regulations have been brought in. Because it is the fact that unless there are regulations, there have been not many movements by banking industry in terms of adoptions. So to aid adoption, I wouldn't say necessarily for cloud, but to aid adoption of new technology, there are regulations that ease the adoption itself. And so if you look at the way in which regulations came about, when cloud adoption was an opportunity, the regulations came in to determine regulations for IT data and risk assessment methodology. Then you have the regulations for digital payments that came in. And then you have the DPDP Act that's come in. So I think those have helped the banks get a clear roadmap in terms of the adoption rate. The other clear aspect is, of course, the client mandate. How do clients want to approach the whole digital adoption? And that, of course, has been something where India's adoption of either smartphones or the ability to run micro ATMs for digital transactions, tablets, and what I would call as the digital public goods in terms of Aadhaar and India Stack has been clearly the rails for setting up a very robust digital infrastructure in India. So I think that's where banks are far more equipped in India to take up a digital adoption than others. But I take the point that was mentioned by Raghvendra in terms of how you look at assessing cloud adoption. There is an opportunity as well as a risk. Opportunity is for the fact that banks and fintechs can now look at a common master data approach, which helps them comply with regulations far more easier, either in terms of onboarding or in terms of the various rights of consumers for that to be managed. As long as you have a singular source of customer data, it helps regulate and manage that and keep it secure much better. So that's the re-architecture required by banks. When it starts with systems, it can eventually then get into the cloud. The second aspect is in terms of how banks would look at their processes. That's a clear need for reassessing the processes part of it. Now, when we look at cloud adoption, there are a few steps that banks need to take to make this journey more easier. One is to look at the systems, to make sure that the systems provide for encryption of data, resting, and data on the transition. And this is again in the RBI regulations per se for the IT risk assessment. And that has been now almost complied with all banks because the deadlines are through. And those that are not, I'm sure, as I speak, are working on final dots to be dotted and ticks to be done on that. The other aspect is with regards to the digital payments part. Banks have clearly maintained their jurisdiction of data within India. So when you look at compliance to DPDP Act, etc., I think they are far equipped to do that. Now, to move to the cloud, the whole transition is with regards to saying the logistics to say how to make this happen. There are enough talent in India to able to do that. But I think the confidence measure that's required is about the data jurisdiction and what data do you move to the cloud. So as I've observed global regulations, for example, aside of India, there has been the aspect that you say that you take lead management on the cloud, but you manage your transaction data within your on-prem. Then the second aspect is with regards to saying payment data can be on the cloud because that is PCI DSS compliant because all the master data is stored within the bank. There is a segmentation of data that is there on cloud and off cloud. but you then have the trend to say that banks can have their in-house private clouds and then use a hybrid cloud model to go about it. So when we say cloud adoption, it's not necessarily shipping all data outside of the premises of the bank. It is a hybrid model of adopting it. And I think gradually you will see all large banks in India adopting cloud. When it comes to small banks, you'll be surprised to know many of them are already fully on the cloud for that same purpose. And for the reasons that if you look at the IT risk assessment guidelines or whether it's the digital payment guidelines, a small bank can ill afford to have its whole aspect of HSM, the whole firewall mechanisms and the whole 9 yards to say in terms of the security measures to be done in-house. And that's why they've adopted cloud already. Like I said, 2012 onwards, we've gone through. We today have about 310 banks on the cloud using multiple modes of either core or digital payments. But if you look at global, that number would be 2,600. And that shows about the fact that cloud adoption is something that people are taking seriously globally.
Now, a very significant part of this whole journey has been the cybersecurity aspect. That just doesn't seem to be coming down. Ranjit, I want you to probably lead here a little. What's the sense that you get? Is cloud making us much more vulnerable, especially BFSI? We've seen a lot of vulnerabilities among the fintechs. Cases are already out. So what's your take, and is enough being done to make sure that the data is secured?
No, I think I was just reading this morning an interesting statistic, right? In 2023 current year, almost more than 80% of breaches involve some form of cloud data, right? And I was curious, because while here we are talking about digital transformation, we're talking about scalability, everything, but I think still the security is where a lot of challenges are emerging. It's not as if I think organizations are doing enough, but I think the challenge what we are seeing is, especially in some of the large cases that I've dealt with, I think what happens is typically when there is a hybrid environment, when clients have an on-prem plus a cloud environment, and then they are transitioning to a complete cloud. I think that's where there needs to be a shared responsibility in terms of security, right? They need to have, because today I think cloud is enabling from an overall configuration standpoint, vulnerability management standpoint, you have all the options available. But I think the organizations need to also take the responsibility to enable it, to ensure that they are actively securing themselves by following the right standards. There are all the different standards. We have the cloud security standards as well, right? But I think organizations need to sort of take that extra step of ensuring security of that as well, right? And that's where I think we are seeing a lot of organizations are facing challenges. One is obviously the shared responsibility. Next is a lot of misconfigurations happening. The environment is there. There is a whole lot of flexibility, but it's not being enabled to sort of take care of all the latest threats that we are seeing, right? Then you don't have enough skilled people also today in the market, right? That's another big challenge. While we do have technology, we do have all the right mechanisms, but I think you don't have enough skilled people to sort of manage all this. And that's where I think a lot of organizations are facing challenges. And I think that's going to be a continuous challenge in the next few years. And that's where I think the industry, the government is coming together to sort of upskill people. I think we are seeing a lot of different courses, programs in different universities to sort of make security also like a mandatory subject, right? I think that will only help because I think we do need a lot of people, to sort of manage all this, right? So I think it is going to be a challenge. It's not as if, because the pace of adoption is just going to increase, right? I think obviously clients cannot stop. I mean, they have to pick up pace, right? And banks, fintechs have largely, I would say, been good at managing security because it's an advantage also, right? They are small and nimble, so they don't want to have a lot of things on premise. So they've outsourced completely to cloud. And I think they've sort of have them manage the responsibility. It's not to say that they are not vulnerable, but I think from overall managing of security, I think they are in a better shape because they do know the vulnerabilities. And let's say once they find out something, they're able to quickly plug those gaps. And that's where I think banks are facing some bit of challenges. But obviously the regulatory environment is another aspect, right? I mean, regulation just keeps increasing and increasing, and we have the privacy bill, and we have the Digital India Act coming in soon. So the regulations are also going to increase. So that's another challenge that organizations will face in terms of managing security. But I think if they are able to sort of ensure that the way they've been managing security on-premise, it's the same process they have to follow. Have a shared responsibility, ensure that security is not slipping up, because one disruption, it could change the entire organization's landscape. So manage it with a shared responsibility and have enough people to sort of take care of it on a continuous process.
Right. Now, there's one technology term which we have to make a part of our discussion. Without it, nothing seems to be complete these days, and that is generative AI. So, Sajid, I want to start with you. How are you making sure that even entity embraces generative AI?
Yeah, you're right, Shivani. I mean, there's a lot of new jargon which keeps coming in every now and then. So if I have to define generative AI a little bit, it's basically data modeling. I mean, you bring in historical data, and then you're trying to create models to ensure that how you can prevent those incidents or create near realistic models. That's what we are talking about. Entity globally, we are investing about $3.5 billion in R&D. So I mentioned about an MOU which we signed. Other than that, from an R&D perspective also, we are spending $3.5 billion into R&D. And there's a lot of that money which is being put into two things specifically. One is sustainability, which is another thing which we are all talking about now, how we can go to renewable energy. And the second is on AI. So these are two things which we are doing. Just an anecdote is about 40% of the global network traffic flows through entity data centers globally. This is across the globe. And that brings and that gives us a lot of data to look at. So if I have to say how we serve our clients using AI kind of modeling is we try to see how we can give them more power efficiency. As I mentioned earlier also, in India, power is not a luxury. It's something which is a necessity. So we are trying to see how we can do predictive monitoring, how we can ensure that if we have devices inside the system, how we can ensure that they don't fail, and we reduce downtimes, power efficiency, how we can ensure that the power is distributed inside the data center in a better manner, the cooling which is required. Today, Prakash just mentioned about how 40 million transactions became just added a 10 overnight. If we have to take that kind of a load, there's a lot of compute which will go in. And if you're adding compute, there's a lot of heat which is going in. And a data center needs cooling. So I think these are the two places where we are currently working on power efficiency and how we can give optimized cooling inside a data center. That's what we are doing from a data center perspective.
That's interesting. And you think that data center is just about servers. Prakash, Freshworks, I mean, how are you using Gen AI?
See, as a company, we started investing in AI much before the recent buzz around Gen AI. I think we started investing in the year around 2018. And that's the time we started. So our core idea has always been around customer experience. But how do you get there? The first thing that we wanted to solve is the employee experience before we even get to the customer experience part. And Gen AI is playing a part in putting these together, right? So if you have to deliver great experience to the customer, it starts with your employee. So that's the core belief of the company. Now, rather than just walking you through, I'll rather give some examples of how we are doing it today on the floor. Now, bankers love numbers, so I'll probably throw some numbers now. So we did a Forrester report, which says by using the Gen AI features in the tool that we have, the customers get to save $2.1 million in just about 2 years. And this is a saving. Why wouldn't somebody be interested in, right? If I were a CEO, if I was a CEO, this is something that I want to adopt right now. I'll validate this number. I'll come back and tell you how we are doing it. This is one of the barriers also for a lot of people to getting into Gen AI, right? So that's the first problem we help solve for our customers today. Now, the second important thing is every time we talk about Gen AI, the second thing that comes to our mind is around implementation. How much time is it going to take for us to roll this out? Trust me, some of the Gen AI features that we have or the rollout that we do, we do it in just about 10 minutes, right? And this is the speed at which we are today rolling out features and getting it implemented. Now, because of this, imagine the payback period. Now, we are living in the age of now. I push a button, I get my food delivered. I push a button, I have someone to pick my car up. Now, as business head, why would I invest in a tool and wait for about 36 months to for it to pay me back, right? So this is the question which we started investing in GenAI. Now I'll validate and tell you how we are doing it as a product. Like I said, we have our customer experience tool, right? So here, when a support agent picks up a query to answer, like for example, I'm a customer. I go to a customer agent and then I tell him I have a couple of problems. And when he sorts it out, he has to go and close the ticket, right? Before him closing the ticket, he has to write a quick summary of the conversation that I had with the customer. So for him to do that, it takes about 5 minutes. With GenAI, the summary is automatic. It happens within seconds. So every customer agent, if in case about he takes 50 queries in a day, he saves 4 minutes per question that he answers. So 4 into 50, he saves about 200 minutes every day. And if I have about 500 support agents on floor, 500 into 200, I'm very bad in math, I'll leave it to your imagination, right? And then you just multiply it to number of hours and months. I think it's just a staggering number. That's how I said 2.1 million you get to save every year, right? Now, this is just one feature of GenAI. Today, I'll tell you what else it's doing. If I'm a support agent, if I'm typing an answer, it helps me correct my grammar. Money is a very serious business. I don't want to give wrong answer if somebody comes and says, hey, my 10,000 is not in my account. So I want to give the right responses, right? So something like this really comes in handy. And GenAI also auto-completes sentences today. So if an agent, I'm just typing something, it quickly populates. And if there is a customer email, GenAI can actually come back with a possible email that you can send back to the customer. So again, a huge timing saving for you, right? And this is on the customer experience side. Now I'll talk about the employee experience. As IT agents, he still works on a lot of mundane, repetitive queries. Like for example, if my laptop is not working, I still run to my IT agent, calling him saying, hey, my laptop is not working. I forgot my password. So many other repetitive questions, right? Honestly, today, we do not hire IT agents for this. I mean, they can do a better job than doing this, right? So with GenAI, we're able to automate 70% of these queries. So these IT agents are doing better jobs than what it is. And I'll just take it a little ahead. And I'll also take it to IT operations management. When there is a large outage in a company, there are tons of alerts that goes across the company, right? So it becomes extremely difficult for the DevOps person to really pick out and understand what is the root cause of the incident or why there isn't outage. So by the time he starts working on this, there is already escalation, there is money lost, cost lost, and probably some of the governance and complaints, everybody is woken up now. So with GenAI, we are able to identify the incident, we are able to just map it to the right agent, and then he starts working on it immediately, right? So these are some of the simple things. I mean, at the outside, it looks very simple, but the cost savings, the efficiencies, or what it is bringing is immense. And I think we're just getting started and warmed up here, right? And there's a lot more to come in.
Good to hear that you didn't say that I had to reduce my team to an X number. That's the good part I'm taking from you. But Rajesh, a slightly different question for you. Now, Kia.ai did launch the first metaverse for banks. Yeah. Now, in this whole debate of generative AI, where do you fit in? And where do you see the slight future, if I may ask?
So, I agree with Prakash that, in terms of the benefits of generative AI, I think it's, to my personal opinion, it's the smartphone moment for artificial intelligence, right? The ability to scale, the ability for adoption is made far more easier. And I say this because we've been using AI in regulatory technology since a decade and a half, where it meant that it was the use of neural networks, computation of large amount of data to arrive at some inferences, and those inferences would mean some ratio, and that ratio would then mean some decision. It took 3 hops, so to say, of data, of decision, to finally say that you should do it or not do it. Generative AI sort of skips all that, right? And it straight away gets to the point to say, giving the verbal meaning of what it stands for. It also gives a lot of ability to express, not just in terms of what the data stands for, but also in terms of how you want to connect and engage with your customer. So I think there are 2 benefits of generative AI in those terms, that it sorts a lot of things for the banks or for the firms itself in the back end, and it also sorts a lot of engagement issues with the customer. So when we looked at designing India's, or rather the world's first business metaverse, the whole concept of our metaverse was about saying that, first of all, it will not be reliant on cryptocurrency. Right? Because I have my own opinions on cryptocurrency. I would say crypto assets is a nice word to use, staying in line with jurisdictions and also meaningfully what it stands for and what it can provide. But when you look at the aspect of using the metaverse, the advantage of the metaverse is using three-dimensional avatars to interact with the consumers. The consumers themselves have their avatars, and it's a point to say that whether they have a Web3 identity or a Web2 identity, both ways it doesn't make a difference. It's important that there's an engagement that happens between two people in a virtual world. When we look at that aspect, the only way in which you can help this communication be automatic and not have somebody in the back end keying in words is generative AI. So in that ways, I would say generative AI will drive the metaverse, or the metaverse will stay constrained to what it is, which is the bad part of news to say it's going down, right? For metaverse to succeed, it will also need the fact that there has to be a relationship between what is the context of the customer. I would put it in a banking perspective, a contextual banking. Why are you here across the board? What did you want? I have seen your needs, and now what do I give you as a decision? The second point is, how is the metaverse going to be different than a mobile banking or internet banking? So there are obvious advantages of a virtual world, etc. But the important part is again generative AI. So I think that way it's certainly going to make a difference in the way engagement happens, not just between banks and their customers, but also within the virtual world.
So you're still betting on metaverse?
Oh, absolutely.
Right.
I have one point there to say. I always say that, one human cannot define the outcome of mankind.
Of course.
So you get what I'm saying. So I think the firms that are working on the metaverse per se, the startups, the companies that are into it from a serious intention, will bring it to a fruition.
Right. Raghvendra, what has generative AI meant from a cybersecurity point? And how has your life as well changed because of that?
Yeah, thank you. I think, see, AI has been around for quite some time, and like everybody else, we have been ahead of the curve. And Shivani, you cover TCS, and you know our CEO and CEO. Even a recent briefing, they have spoken a lot about our AI investments, etc. But the way Gen AI we are seeing, right? Again, my colleagues here mentioned, right? Prakash mentioned about the repetitive tasks. Right? Now, there is a talent issue already within the cybersecurity space. So very first thing it is doing, it is elevating the position of current subject matter experts. Right? No eyes on glass, no initial triage type of situation. So it's reducing the effort, right? Improving the mean time to resolve and repair and response. It's the very first thing. Now, let us look at some of the very good use cases in terms of capabilities, right? And I was, I think, reading one of the Gartner analysts, and they were like, this is going to be an language, right? Gen AI, right? You are not Java developer, but you can write a Java code, Shivani, right? Using Gen AI. So it is going to solve a lot of issue in translating the security into the non-security terms, right? We have been closely working with Microsoft, Google, and Amazon Gen AI aspect within cybersecurity. There is an huge, the press around Microsoft Security Copilot and Google Security AI Ops Workbench, and the way they are acting as an CISO advisor, creating quick summary, bringing all the curated contextual threat intel within seconds from dark web. It is amazing. And we believe there are use cases around every stream of cyber, whether it's identity, whether it's the data, whether it's identifying risk, or whether it's a predictive ones, right? We have not been able to very successful in the predictive analysis within whole IT stuff. So I think the predictive outcomes, we are expecting a lot within this. So yes, we are investing a lot. We have trained 100,000 plus associates in Gen AI so far. Within cyber, we have mandate for everyone to go through an hyperscaler-based trainings and enablements and everything. And there are use cases we have already started working with customers. So yes.
That's interesting. Ranjit, how has your life changed with Gen AI, being a risk head?
I think, again, what we are doing is obviously using the technology to see how it can predict malicious patterns in terms of identifying threat actors, using it to quickly detect incidents which could potentially become large incidents, maybe use those patterns to sort of detect those anomalies. I think from a larger issue, I think phishing has been a very large issue for a lot of organizations. I think automating a lot of stuff in terms of identifying phishing, communications, social engineering techniques, right? I think GenAI has been really useful, and I think there are a lot of use cases coming up, and it will continue to evolve, right? I think it is only going to improve the life of a SOC analyst, because today, typical SOC analyst has to deal with so many alerts, right? And they have to make sense of what is critical alert, what is high, what is medium, right? And I think GenAI will definitely help in better prediction of getting to the most meaningful alerts, and then quickly detecting and mitigating those incidents so that the damage can be minimized.
Right. One final question from me to the panelists before we open it up, if there are questions. And this is the most important talk point in the Indian tech landscape, and that's the regulatory changes that have happened in the past 2-3 months. Now, it's been almost 2 months since we have had the Digital Personal Data Protection Act, which has now become a law. What compliance challenges does it pose for business operations, again from a BFSI fintech point, when we look at it with the combination of RBI's existing sectoral rules? Anybody can take it. Yeah.
I'm able to take it. So this is a topic in itself for a panel discussion, but I'll quickly summarize my thoughts on that. Point number one, I think from what DPDP Act provides for is the where the data jurisdiction is. And it's important to segregate that to say that the payments data that was required to be within India, and that pretty much stands as it is. The second point is with regards to saying that where does the customer data then lie otherwise that you have for loyalty and other aspects. And there is a right to know where it is, and then allowing that to be processed overseas is fine so long as there are controls to make sure that the customer consent is also obtained to that. And coming to that point, I think there are areas where it will require a lot of fintechs to revise their whole plans of data jurisdiction and also redesign some of their systems, because I would imagine, and I'm not clearly know of that, but I would think that most of these companies have focused on their core business and outsourced most of the analytics outside. So there will be a need to sort of ship that function back into India, or rather at least the ownership of data back into India. The third point is with regards to the two critical aspects when it comes to customer data. One is to say that there is the consent. Consent is not as easy said as sehmati in those terms. You know, that's a nice word, and it's got a good framework that is set. But the volumes on sehmati today are for a different purpose of account onboarding. And that's one area for data to be captured. But you have a huge legacy of data where there is consent already required. Now, India has been blessed with the fact that we've got digital literacy and inclusion in the rural sector. Now think about it from a perspective of consent, it's a challenge to be met. Third point is with regards to the aspect of where you would have the ability to have right to be forgotten. Now that's an important element from a GDPR perspective that I have seen in Europe. The implementation of GDPR faced its challenges for this last rule. And that is a part that most firms have to deal with rightly. And this pertains to saying how you organize your data, which is why I said that you organize a single source of data so that you are able to address it. And there is an important element of anonymization of customer data that needs to be addressed. So this in a nutshell, I think, is the DPDP Act compliance and how banks and other fintech firms need to comply.
Right. Ranjit, from a consent point, do you think there's a...
Yeah, I think it will be a challenge for organizations, because I think traditionally we've not been privacy conscious, right? I think privacy has been granted for us in our country. But I think this law will change a lot of that, right? And I think predominantly for organizations, I think the challenge will be in terms of going back and taking consent, because traditionally they've already been taking consent in a different way, but now they have to go back and retake it if the purpose has changed, right? Let's say if they're using it for the same purpose, then it's assumed that the consent is fine. But if the purpose changes, they have to go back and retake the consent. That will be a big challenge. Next is, I think, data subject or data principal rights, because there are a lot of rights given to individual users, and that's where I think organizations will face a challenge, because today, if let's say a user comes in and says, please let me know where all my data is, From a structured data standpoint, from an ERP system, it's easy to get the data. But the challenge is where the data is in unstructured format, right? That's where they'll face a lot of challenge, because today I'm sure organizations have to sort of ramp up in terms of technology in understanding where the data is really being stored, who all have access to the data, how all it's being sort of managed, and then is there a sound data retention policy or a data disposal policy? Because that will be really important, because today I'm sure a lot of organizations, while they are working on it, but I think there's no sort of solid process in that sense. So managing a data and then the governance of data is really an important challenge which a lot of organizations will start thinking about. And data governance will be in focus, in my opinion, because I've been a sort of a vocal point in that sense, trying to advise a lot of our clients in managing data. You need to have effective data governance. But I think data privacy will get that into focus for a lot of organizations, and organizations will start looking at that in a much more evolved way.
Thanks. Do we have time for a few questions? Vinu? Oh. Okay, two. Since I saw you first. Yeah, the gentleman in the first row.
Hi, this is Sanjay Panda. I am a ISACA member and a legal guy working for an IT company. My question is that due to of data privacy, do you think that the trust level of Indian company to manage the data in a right fashion is going to increase, due to which the data center within India and outside data to India is going to increase, and in the coming days, India will evolve as a global data center for Indian economy. In simple terms, Indian economy will also increase in the data center terms, just like the information technology will increase over a period of time. A data center will be, because now the privacy laws will come up. Trust will increase within the India and outside global leaders also trust on India. So
you're asking, will more data centers come to India?
Yes, yes.
Okay.
That's
Sujit, would you want to take that?
Yeah, I think that's a thought which came into my mind when Rajesh explained about the loyalty part of it and the analytic part of it, which is residing outside. When the data localization bills came in and RBI started breathing down the global banks on that, obviously there was a lot of churn which happened, and overnight, I mean, the banks, the global banks are still trying to complete the process. They have given their roadmap on how they will comply to it. So obviously there will be more data which is going to come in. Then it has to reside somewhere. Now it is on the ownership is on the client on where he wants it to reside. So it could be or it may not be, but then it could be an opportunity also. That's what I would say.
okay.
Hi, good evening. My name is Pankaj Pradhan and from Cowdet Technologies. We are basically a tech startup focusing on cybersecurity and secured SD1. So my question to you is, like, migrating to cloud is definitely is inevitable, and that gives immense benefit to all the BFSI segments, since we are part of BFSI. But let me tell you, today, most of the cooperative banks, a good number of cooperative banks, the CIOs, he still fails to have his data center at his backyard. You know, he would love to see that whenever you ask him that where is your data center, he would like to point that here is my data center, the backside of my room. Number one. Number two, now moving on to cloud, today I don't think, I must say almost like 70 to 80% of the cooperative banks, they are still not have migrated to the cloud. Number one is definitely the concern that might be arising because of the security they have not deployed, and hence they are definitely scared of. And secondly, I also believe RBI has not still really taken a big thrust or impediments, or rather I put it as a big thrust for the cooperative banks to move towards the cloud. Because so that's the reason you'll find 80 to 90% of the cooperative banks are still not in the cloud. They are everything is on-prem in a way. So what do you think RBI should take it as a, as a incentive or a motivation to ensure that even the cooperative banks or even many of the small finance bank also will find they're still not on the cloud. So what should be the RBI's incentive or motivation factors for this?
So yeah, I think from a perspective of the number of banks that have moved as cooperative banks, we should segment it and say there are a few unit branches and there are a few that are 5 branches and there are some that have over 150 branches. So it depends on what segment of cooperative bank do you look at.
I'm talking about even the cooperative banks who has got more than 100 branches. Probably I can say good number of cooperative banks with more than 100 branches still not have been migrated to the cloud.
So I'll answer to that point. The large cooperative banks, as they are today, do have to comply with the RBI guidelines. So it is not that RBI needs to do something more to encourage them to go to the cloud, because like I mentioned, there are specific guidelines on the IT risk management part that ensures that they have the responsibility for customer data protection, for encryption in transit, etc. So all the same guidelines that today apply to commercial banks applies to cooperative banks as well in terms of the IT risk assessment. So that if it is not an enough incentive or I would say, aspect that you need to consider to move to the cloud, there can't be a better one. I think it is individual decisions that banks make to say that they want to have data where they can control it for the perspective that they may not have the trained teams to manage cloud infrastructure. It's more to do with that and the SOPs. The next part is with regards to the data, the literacy on cloud itself. I think there is a very clear need for higher literacy on what the cloud offers. Like for example, I have been in that stance when we sell to cooperative banks. The first option we give to them is cloud first. The next option is on-prem. It's up to them to take a choice. But I think RBI has done enough to work on that part. They've given the carrot and the stick. It's up to the banks for looking at adoption.
Hi, I'm sorry that's the time we have. But thank you for the audience and thank you to the panelists here. A really good session. Thank you very much. Thanks.
Thank you very much. And quite an interesting session. And, this whole focus on security can't be an afterthought. Very interesting. Thank you. So much. We have some sessions continuing in the adjoining room. Thank you.
We're not an airline, but our network connects global business.